any severe turn that would reinforce a US dollar Japanese yen bear that would have this current little bounce where we're trading at just around 107.36 back down towards this 106.478 down into that bearish target zone. So remember, we've made a now already a lower move high and a lower move low. This is bearish, which fundamentally reinforces a slide in the US dollar yen. So we are looking for a potential turn in the dollar. We're starting to show signs of weakness. We are starting to see a bull potentially form in the euro with that buy signal from a week and a half that has seemed to held up. We'll see if the target range gets hit. We have the pound US dollar, which is looking like it is starting to gain some strength and some momentum. And then we had a US dollar Swiss, which already looks like it's rejected parity multiple times last week, showing a failure of US dollar strength. So perhaps the US dollar index really is going to get a turn, and in which, if that does occur, look for that to reinforce any US dollar Japanese bears, setting off a slide targeting that 106.478 level and down to the bearish target zone. And with that, just want to remind you to do your homework, look at the markets, always weigh the potential trades, have a plan, and stay the course. I'm Teddy Keckstedt from Forex Trading Unlocked. We appreciate your time today and the NADEX for sponsoring this webinar. You can always find me and more information about the FX markets at www.forex-trading-unlocked.com. And you can see us when we stream live webinars there on the homepage, or check us out on Twitch TV. And also, if you're interested in learning more about like that piercing line pattern and how to trade buy and sell patterns from candlestick pattern setups, you can read my book, High Probable Japanese Candlestick Patterns. It's available on Amazon.com in paperback and Kindle version, and you can also read it if you're a Kindle Unlimited reader anytime, just by the page, whatever. You don't need to buy the book, although I would prefer if you buy the book. So anyhow, thank you very much for your time. You have a great day, and enjoy what's a little bit left of this summer. Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we're here with a Forex market breakdown for you today. And we're going to talk about a couple of the major currency crosses versus the dollar. And then we're going to first get you the disclaimer to let you know that this webinar is for illustrative purposes only. And now with that, let's get to our economic calendar. So the currency crosses that we're going to talk about today is the US dollar yen, the US dollar Swiss, the euro US dollar, and the British pound US dollar. Today we have, for the pound, Boris Johnson's speech, and then tomorrow we have for the euro retail sales, and also for the US dollar we have an ISM number. And then on Friday we have for the US dollar also the unemployment number. So of these numbers, really the only one that kind of sticks out is the euro retail sales number. The Swiss as well as the EU have obviously been downgrading their economy and expectations, but they also just reduced their forecast once again for growth just a few days ago. So this retail sales number will be interesting to see if that has any impact on the euro. Now, for those of you that are watching the dollar index, which if you're a Forex currency trader, you should always be paying attention to, you know that the dollar index is pressing highs again. However, we're starting to see a little bit of divergence, and we'll look to see what's going on with those major currencies. And that's when we get through that, you'll understand why I'm saying that it's an interesting little paradigm going on right now. We have the Swiss, which is at parity, and a couple other things to talk about. So with that, let's go to our first chart. So here we have the euro US dollar, which this is just a chart from last night, and as you can see, the market has been trending lower, and yesterday the market set a newer low to start the week off. But at the same token, it reversed gears and settled very positive. It set a piercing line candlestick formation right there, And currently the market has come back off its close from yesterday and is slightly lower. But with the strong dollar index today, the euro actually is only slightly lower, which is very interesting. Now, if you look at these different colored lines here, we have the downward sloping blue line, which is our channel. And as you can see, that yesterday's low is kind of buffering down the lower boundary of the channel going lower. Does that mean that we're going to have a rally back up to that blue line? Not necessarily. But let's look at some of these numbers that we have here. So that last lower move high, you can see the first yellow line at $1.1111. So a nice series of ones there, easy to remember. That is our first major upside pivot point. Any type of rally, if the market was to get above there, would be signaling all kinds of strength should it take out that level. First of all, downward sloping blue line would no longer be resistance, which should be one major thing, which would be mean the euro US dollar would already be reversing gears. So is that going to happen? Well, let's talk about the fundamental aspect of what's going on here. So as far as the numbers that are coming out, like I said, retail sales come out for the euro tomorrow. Is it really going to impact this market? Well, I think as far as the economic direction for the EU, it'll be very helpful as a guide, whether it reinforces their current consensus or goes against it, we'll see. But I don't think it's going to like set a trend. So right now we have a little signal that did occur yesterday. And while the US dollar index is pressing the highs, it seems like this major currency, the euro, which is one of the biggest weights in the dollar index, isn't really reacting to that bullish US dollar. So now the fact that the dollar index is on highs means that at any time, obviously, like in any market, you can have a turn, but the trend is your friend. So for right now, that any of you bulls and bears, you should take that into account. So for you bears, you're on the right side, but you're also buffering the extremes of the lows. Now let's look at these other lines that we have here, centering it right around where the market is trading right now. So where our piercing line is, we have the low from yesterday, and we have a couple strike prices here that we're looking at. We have the 109.75. We have the 109.25 and the 108.75 lines. Now, what does that mean? So these areas right here are kind of containing the current new low as well as the median of where the trading has been for the last week, actually. So for range traders, if you're looking to see, and here's the one thing you got to take into account is what is the volatility factor? So the euro US dollar has obviously been trending lower since the beginning of the summer and is now pressing the lows. But look at how much it's actually moved. The high is only just above $1.14, and then yesterday we just probed lower into this lower 109 territory. Now, historically speaking, down from 109.5 down to 108.5, the euro US dollar typically has found support no matter what the conditions. And since the sky is not really falling right now, and this is all just basically, you know, a trend obviously that has been in motion now for months, I think that you have to kind of go with how it's been moving. And since we're pushing the lower boundary of the channel, odds are just by attrition, not that we're going to keep on going lower, or excuse me, go higher instead of rally in motion. It's a good time for some digestion. So if you look at these green lines here, these are kind of your pivot points and strikes to look at. And as you can see, you had a previous low, two lows actually that had occurred in the month of September. So that would be the 109.75 and the 109.25 green pivot lines right here. So those are two good areas to trade against. So if you are bearish, obviously the upper 109.75 would be probably one of your first low for a week shorts. I would say that would be a good area to use as your boundary for risk. And then remember, you have the downward sloping blue line that's coming in here. So as time moves over the next week or so, that 109.75 becomes more solid because of it's by attrition and time it's coming into that downward sloping resistance. So our key pivot points to look for right now is basically key off of yesterday's low, I would say, for your bulls. because any failure there, one, means newer move lows. Now, we have just recently made a lower move high in the middle of September, and now here we are starting off October, where we had planted a brand new lower move low. Now be careful with this. Yesterday was the first day of the new month. Now, a lot of times when markets establish a new high or a new low, they're trending into that first day. You can get a lot of reversing of gears around that couple day period as you start off the month. So today, right now, the euro US dollar is slightly lower, but it's only a little bit lower compared to the high and the close of yesterday. So if the euro US dollar falls out of bed and takes out that low, then look out below. All you bulls out there, I think you really need to hang on and wait for a true buy signal. Right now we have a short-term one that occurred yesterday. And obviously, if you look at other indicators, you would see that the euro US dollar appears to be oversold. But that's when it becomes very dangerous. This is when the bears can really, really press and add to their profits. So I expect to see a lot of volatility, more of a technical trade, over the next couple sessions, because of the fact that we only have a few numbers that really are going to matter, and most of them are for the US dollar as we come into the end of the week, especially on Friday with employment. So over the next couple days, the range traders might have a really good chance at trading these 3 green pivots here, just because of the fact that the bulls and bears are going to be grappling for direction, and we may have to see one of those unemployment big volatility spike days. So sometime between, now we're not trying to pick a bottom or a top, but never try and do that. But if we are in a bottoming phase, somewhere between yesterday's new low and Friday's unemployment number, I think you're going to see whether you're going to have that, who's going to win the fight. If we're going to get a rally, which then starts to challenge the downward sloping resistance line, or whether we're going to fail and make new lows and continue to drive this market lower. So also, remember we talked about the dollar index. Watch the dollar index for dollar strength. If you start to see a major pullback in the dollar index or a sell-off there, which could happen with tomorrow's ISM number and definitely on Friday's unemployment number, something like that would have the euro most likely get a bullish surge, not necessarily a change in trend, but especially if it's sideways and contained over the next day or so, you look for a potential head fake, or especially if there's a spike low, it could be like a balloon underwater, one of those kinds of days. So unemployment is one of those days. Sometimes they're not events, but then there's days where it's going to take the market really hard one way really quickly in the morning, right off the number, and then there'll be a knee jerk so fast that it goes the other way and then sets a new trend actually for usually a couple sessions and follow through. So all right, with that, we've looked at our pivots, and definitely look for, if you get a breach of this 109.75 and a breach of that downward sloping resistance, then I would say we definitely have a nice little trend to the upside targeting that 111 area. And then for longer term, any trading above there would go towards that 112.49. And those are areas that the reason they're very bullish is because the market's been in a sideways trade for the past year. And only over the past few months has it been pressing the lower end of that sideways extreme. And also look at the numbers. The range just in the past 5 months has been nothing more than just over $5. Not a very big range for a big currency such as this. So with that, let's go to our next chart, the British pound US dollar. So on the same side of the pond over there, and remember that the pound and the euro are also still dealing with Brexit. So part of the euro weakness may also be because of the fact that there's no coming to terms yet with Brexit. Now, we mentioned in our, when we talked about the economic calendar, that Boris Johnson is speaking today. And now what's interesting is that the pound today is slightly lower than it was yesterday, and it's planted a new low and settled positive, as you can see on this chart here. And then last night, it started to trade a little bit lower again. Now, it's basically where it is right now on this chart again today, and we will probably see, I think, a little bit of digestion here, because we have to see how Boris's speech gets interpolated, if you will, by the rest of the EU and the UK and the rest of the globe, as far as if it's going to impact the currency direction. So with that, I think we use yesterday's low as our new guide. And if you take the low from the beginning of September and use yesterday's extreme new lower move low or higher move low on the longer term, if that support holds, then obviously we use that low as our downside pivot. Now what's interesting about that is if you look at the yellow lines here, we have $1.2311 and $1.2582 at the top. The upper one, if we get a rally back above there, then that really means that this pound US dollar from when Boris Johnson came in to become prime minister a couple months ago, that this deal is not only just a big deal, but it is coming to fruition. Now, if you notice at the end of the chart there, by where the pricing is, you see that vertical dashed black line. That's our Brexit deadline. That's October 31st. So we are now on October 2nd. We only have 29 days till Brexit. Or do we? We know how this movie has gone so far over the past few years. So we have this target range right there, which you have the low from yesterday, which is in the heart of it. Now that target range is the area from that sell signal that had occurred, that last higher move high, which is where if you look at the upper yellow pivot point at about 25.82, that high that is right there. This break that we've recently had over the last couple of weeks, the target from that sell signal and from that slide comes right into this target range. So we've already hit the target. So does that mean that we're going to get a rally and the trend's going to continue the short term to the upside? We don't know, not necessarily. Right now we have the low that was set at the beginning of September, and now we have the beginning of October where we may be setting a higher move low for the longer term if this market is going to remain bullish, which it has been bullish for the past month, but not for the past week and a half. In the last week and a half, you got to remember, Parliament came back online. Boris Johnson has suspended or prorogued, if you will, Parliament, which now they have been that has been overturned, and they are back in action. So this slide that you have here that happened over the last week going into yesterday's trade may have a lot to do with that. The volatility for sure would be related to that. Now, it's downward pressure. That could be a lot of things, but I think that it could have been a big profit-taking break because of the fact that whatever was one of the political forces that was bullish for the pound US dollar had collapsed over the last week and a half. But the market has absorbed that, or should have by now. So we've hit the target range, and very likely that over the next few weeks, as we get towards, and you see how we have this black line set there, because that's our Brexit deadline. So as we get closer and closer, it's very possible that we see a sideways trade develop. So I would key off of that low from yesterday, and that's our purple dash line there at $1.2203. Any failure to or a slide that goes below there, not only does it mean that that upward sloping support line that we drew in is not good, which is a failure, but then we take out that low, which means we make newer move lows, which that fundamentally is a technical negative signal. And now where does that leave us? Well, that means that all this rally that we had that was in September that was related to Boris Johnson suspending Parliament and taking the UK in one direction towards Brexit is falling apart. Does that mean that Brexit's not going to happen? No, not at all. It just means it's not going to happen the way that Boris wanted. So that could, now, if you look at that scenario right now, it's very interesting that the pound and the US dollar, even though it looks different than the euro US dollar chart that we just looked at. In fact, let's go back real quick, see how this is trending, and it traded into a new move low yesterday. If you look at today and yesterday, just for the pound US dollar and euro US dollar on the 2-day basis, they made new lows, they settled positive. They're only slightly lower today when the dollar index is very, very strong. So very interesting, and the fact that the range and their volatility is very tight today leads me to believe that this Brexit situation is going to start to contain these markets. So for you range trade traders, keying off this $1.2311, which is just above where the market is at right now. That's that yellow line. That's kind of like your up and downside pivot. Above there, is it positive? Yeah, but it's kind of then just means you're going to probably establish a wider range trade up towards that $1.2582 and not necessarily taking out that high. So, and then only if we fail from, if we're below $1.2311, which we are right now, that's where we're looking to take a test of yesterday's low. And now where will that go? If it keeps on eroding, well, we could keep on breaking into Brexit. So, but I don't think that we're going to do that. I think that unless there's any major fundamental factors, because we have the dollar index that has been strong and riding highs for a while, and the pound and the euro have only as of the last week and a half really been impacted by that, or at least the correlation would say that is impacted by that. So definitely for you pound US dollar traders, watch the dollar index as well. Any sell-off in the dollar index most likely will help to give a lift to this pound US dollar. But like I said, it's more likely going to start becoming a range trade as we head towards October 31st. So for the next 3 weeks, the lower boundary may be just above this $1.22 area, and we may be bouncing right around this $1.2311, which is this yellow pivot right here, basically for the next 3 weeks. So for volatility traders, you might be screwed. For bulls and bears, you might get really chopped up. And for those that you look to trade containments, you may have a really good chance of reaping the rewards as we go into Brexit. Now, that's only for these two currencies. And remember, if the dollar index really starts to trend and whatever, then most likely you're going to see a continuation of the bear trend in the euro US dollar, as well as a developing bear trend for the pound US dollar. So once again, key off this elliptical area, and that will be the area for you to watch the most. Now, US dollar Swiss, this is the interesting thing here. So if you had seen this chart already this morning, you know that the is higher and it took out that high. So this chart was made last night, and yesterday's trading had left a dark cloud cover short-term sell signal. Now, these patterns don't always work. This is a time where you will see where it doesn't work, because if you look at the US dollar Swiss currently, it's actually above parity. So yesterday, the market had just poked above parity. You can see that purple line at $1, which is parity, 0.16. So it had just barely touched above that, made new highs, looked like the bull was in place, and then it sold off in a big way and gave us that short-term sell signal. So with that, it had us targeting that lower 98.43 area. However, today the market reversed gears and exploded to new highs and is currently trading above parity. So the US dollar Swiss trade, this one for sure is a bull, obviously, because we had a sell signal from yesterday that usually is pretty reliable, at least for a couple sessions, and it reversed gears right off that today. So, and in a very strong way. So that means dollar strength is, there's a lot of momentum, because the US dollar Swiss, or the Swiss currency, is one of the flight to quality currencies out there. And the key thing about this is that the Swiss, if you look at other currency crosses, the Swiss is dominating. So this is very interesting, because yesterday's sell signal came in line with the fact that the Swiss is running away, is a runaway bear against a lot of other global currencies, especially the majors. So it made sense that with yesterday's sell signal that this market would actually start to correct lower. That's why we had the last higher move low at 98.43, that purple line, and that target and critical support area there as our expectations for where the market may go. However, this morning we reversed gears. So this is a big deal. Why am I talking about that? Because we had one direction for bears, and it obviously has been proven wrong. The bulls are definitely showing their strength, and it's giving us a different way to look at these pivots. So originally I had the pivot at the high from yesterday, which obviously no longer is that relevant. However, these two green strike prices, 99.75 and 99.25, do become relevant, because originally they were looking to be potential areas to sell around and use as your risk levels. But since they are no longer risk levels for a bear, now they become risk levels for a bull. So now I would take that into account and watch the dollar index, and as long as that continues to pressure new highs, especially as we move into Friday and unemployment, this freight train going to the upside is one to probably take a ride on. I don't think that range traders swing traders, I think, are going to have a good one with this one. So if you're directional and you're looking for swings, even on a daily basis, obviously there's volatility in the U.S. dollar Swiss. Now there's also a key note here is that the Euro US dollar, which is typically the more volatile and stronger currency than the Swiss on a daily basis, isn't really moving today. And we have the Swiss, which is like a balloon underwater. You can't see it on this chart, but it's green. It's made new move highs. It's trading above parity. So from 99.30, you have almost a full dollar move that exploded this morning. In the wake of what? In the wake of dollar strength. That's very, very interesting. So that says a lot, especially since the Swiss, like I said, is a major bull against most other currencies. So is the Swiss turning? Probably not, but this is where you need a buffer. If the Swiss is that weak against the US dollar, then the trends from the other currencies are probably going to continue to erode against the US dollar as well. If this trend continues, that is. But right now, I'd be very careful. If you are a bear, wait. I mean, there was a sell signal yesterday, and you can see that today it exploded in your face. So that's also a lesson to be told here, because if you were to be using these 99.75 and 99.25, let's say last night you had put on the sell to use those as sell levels. Obviously today the trade would be wrong, but you would know your risk. It would have been defined. Obviously it would have happened in less than 24 hours. But that's key information to know as far as the strength and the or weakness thereof of these different currencies. So right now, if you are a US dollar Swiss trader, obviously there's oversold indicators or overbought indicators going off. I wouldn't doubt. We just had a really reliable sell signal that came in yesterday. Didn't work. And that's why you always remember, you never try and pick a top or pick a bottom. However, you can trade into moves and trade against moves. There's nothing wrong with that. And this would be a situation where we took a high opportunity moment and it didn't work. But that also gives us other feedback and a reason to have a guide for where this trend is going. So with the US dollar Swiss, once again, for the rest of the week, I would be very leery of being a bear and key off this 99.75 level. Excuse me, and also that 99.25 level as a base should the Swiss fall apart. Now remember, parity is something the US dollar has not been able to hold with the US dollar Swiss. So if the Swiss strength really is there against all these other currencies, this might be a bull trap where all of a sudden it snaps back. So the 99.75 could be a really key strike price to look at over the next 48 hours as we move through the rest of the week. And definitely if we are getting the US dollar Swiss to fall below parity, which is the dollar even mark, then absolutely we might have a correction down towards that upward sloping blue line. And see, that's the thing is right now we're buffering the upper end of a rising channel. That upward sloping blue line has held this trend for quite some time, and it's not outside of the realm of possibility for us to start to come back and at least pull back towards this 99.25 level. Obviously, the 98.43 is a huge directional level as we have increasingly higher move lows. So the trend is your friend. Overall, long-term bull. Short-term could be getting a little toppy. Look for a lot of swing trading. So if you're a range trader, I would be very careful. Directionally, you know your points and use that to your advantage. Now let's take a look at one other currency. Now this is the one where we are getting the true signal. So yesterday we didn't have, we had a typical reversal day. And if you look at, we see here how it says lower move high, this was not a double top. This here high from a couple weeks ago, that is the last higher move high. We established a higher move low, and then now we have established a lower move high. And this, it was a little bit higher last night. Now it is lower and is testing towards this 107,449 level, which is also another key pivot for us. As you can see, the upward sloping part of this channel, this morning it has fallen below it. So what does this mean? We have a rallying dollar index. We have the Swiss that typically has been divergent of the dollar index, especially when the other ones are rallying, are breaking against the dollar. And then now we have the US dollar yen, which today is actually the dollar's weaker. Why is that? Well, the US dollar yen has been in the bear trend overall for a while. Obviously, over the past month and a half, as the summer ended and the fall has begun, the market has rallied. But now it's showing signs of, at least, well, no matter what, it's becoming a range trade to lower type of situation. So yesterday's high, I would key off that. Actually, not that, the high from a few weeks ago at 108,477 for any bullish action. But right now, the market's showing signs of being bearish. We set a lower move high. Today we have follow through that's taken out this upward sloping blue line. So right now we're targeting this lower critical target range. So we have a couple pivots. We have some strike prices here at 108.25, at 107.75, and 107.25. So these would be the areas that for bulls and bears, if you're bullish, then I would look to utilize those areas, because as long as this 106.96 area is holding right here, which is in this target range, this was the last higher move low. So if we fall, we've already taken out this upward sloping blue line, which means that the market is at least stalling the trend. And then we have the market that is eyeing this higher move low here. If we take this out, obviously that higher or lower move lows after a lower move high and are definitely fundamental technical bearish signals to take advantage of, but that's getting ahead of ourselves. Remember, we have US unemployment, a couple other things going on. We don't want to just say that this market's going to snap into a bear trend. Once again, after coming off this nice little rally, it may be neutral, especially because we're coming into the trade talks next week with China, or excuse me, not next week, next month with China. So we'll see. We know that that definitely has, just like we have Brexit, there's a good chance the US dollar yen trade starts to set a range, and that may be what it's done. Maybe right now it's setting the upper parameter of the range for this market for the next couple months, or at least the next few weeks, that's for sure. But I think that since we've tested the upper, or set the upper boundary, or at least it appears to have done, that any follow through to the downside is going to have us pressuring this little area here. So if you're a range trader, or if you're an aggressive bull, then this 107.25 would be a key level for you, as well as the low here of 106.96. Any failure from 106.96, then if you're bullish, you're obviously, I think, on the wrong side, and you should be out of any trades looking to buy lower. Oops, excuse me. And then also, if we get a rally above 107.75 today, which would put it back to where it was earlier last night, then that gives us a chance to ride this upward sloping blue line and put us back on track for a neutral to higher trade. But I don't think that's going to happen, because right now, since we have dollar strength in the other markets that are showing very strongly, except for, like I said, the pound and the euro, you would think that they would be pushing those extremes again, which they are not. So perhaps we are coming into not necessarily a reversal of trend, but maybe we're all hanging on this unemployment number on Friday before we start to spark a direction. So remember, that is coming out, so we can start to wind the coil and start to get tight. But this is very interesting to see that the US dollar is actually weaker versus the yen. So today's dollar index action could be very, very big to watch. We have the US stock market that is now opening. So we're going to have a little bit of balancing of money over the next half hour to hour. So let's see what happens with that. And key off the dollar index. Any big reversal of gears there would help to lift the other major crosses, especially. But I think the US dollar yen trade is something to really look at as far as pressuring those lower boundaries. So the other ones, we know we're coming into a totally different outlook. But with the US dollar yen, you know, the trend is your friend, and right now it has been higher for a medium term. Short run, it looks like it's starting to get choppy and reversing gears, so lean on the bearish side of things right now. And I think that yesterday kind of helped us set the upper end of that range. So key off these pivots here at 108 quarter, 107.75, and 107 quarter for your bulls and your bears. And even for your range traders, if you're looking for a containment trade, which is very likely. But remember, we have that critical target range still to settle into. So we already know we've taken out the 107.49 level, and now we're probably looking to take a test of this 107 quarter down towards this other low over here. And trading down there doesn't necessarily mean that the bears are going to start to jump on the freight train here. It could, like I said, just be a range trade, that because just like we have Brexit happening, we have the China deals that are coming, and they both are coming into a deadline of mid-October into early November. How ironic is that? That on two sides of the planet we have major geopolitical focuses coming into gear. So the bulls and the bears as a whole may start to have a little trouble. But right now it looks like the swing traders are having a fun time with the US dollar yen, and we're definitely looking to press the downside. So key off those key pivots once again: 108 quarter, 107.75, and 107 quarter for the rest of the week. And definitely any type of rally that takes out the high from yesterday would definitely mean that the US dollar really is strong. But I don't believe that that's happening. I think we're ready to start to get a pullback eventually, or at least a sideways trade for the dollar index. So with that, do your homework. Always look at the markets and weigh your potential trades. Have a trading plan and stay the course. I'm Teddy Keckstedt from Forex Trading Unlocked. You can always find me at www.forex-trading-unlocked.com, and you can find us on Twitch TV, StockTwits, and LinkedIn. And also, like we had a couple Japanese candlestick patterns there. I wrote a book called High Probable Japanese Candlestick Patterns. You can get it on Amazon. It's available on paperback and Kindle, and you can use it to utilize the best buy and sell signals used for over 400 years to give yourself a competitive edge against the markets. And just like we showed today, we had a sell signal yesterday and it didn't work. They don't always work. They're not always 100%, but then sometimes they do work. A lot of times they do work, and they also can be used for knowing your risk level. So even if you're not trading them, you can use them as a buffer for protecting yourself. So with that, thank you very much for your time today, and for the Nadex for sponsoring us. We will see you next week.
Welcome back, folks. Dow is down 466. We get the Nasdaq off 122. S&Ps are off 46. Let's go over to our man, Mr. Teddy Keckstedt, as we do each and every Wednesday. You can reach Teddy every trading day, folks, at forex-trading-unlocked.com. That's forex-trading-unlocked.com. Teddy Keckstedt, I can't believe it's a week later already, man. Holy cow, man. These are going quick.
How about it? How about it? We got some interesting things with the Dixie on its highs, right?
Yes, we do. Yes, we do. Talk to us, man.
All right. Well, why don't we start out with your favorite currency, the Japanese yen.
Perfect.
So, dollar index is strong, but it doesn't seem to be impacting the yen. The yen seems to be a little bit stronger. So we had a rejection of 2 weeks ago. We set a higher move high in the U.S. dollar yen trade. And since then, it's been under pressure a little bit. And then we had a spike high yesterday, failed to make a higher move high, and now it reversed gears. And today we're all offer. If you pull up the chart right now, you can see that the market is going lower right now.
Yes. No, I can. You know, that half of 44 ticks. Yeah, look at that, man. Yeah, and you didn't get back in that range, man. I mean, and that was from well, that big down day. What was that? That was August 1st, right? That's when we went from that 109 to 107, right?
Right.
Yeah.
Now, here's an interesting thing for your listeners. Yesterday was October 1st. We have the beginning of a month. A lot of times you have moves that are initiated at the beginning of the month. We had multiple markets that spiked against the dollar or with the dollar, what have you, yesterday. And the dollar index started off very strong today. It was very interesting because it started to go against those pivot points from yesterday, initially this morning.
Yes.
Okay. So dollar index was higher all night, and especially before the U.S. stock market opened. The pound was lower, the euro was lower. The yen, however, the U.S. dollar yen was lower. So that was not going the way of the dollar index whatsoever, okay?
Yeah.
Now we have another interesting thing. The U.S. dollar Swiss, that had a similar sell signal yesterday. They crossed parity, okay, for the second time as of late, but then they rejected it, and it looked like it was a failure. And then like a balloon underwater, the Swiss, of all the currencies, shows dollar strength, and in a very, very big way. So I think that we might be coming to one of those inflection points again, you know, and especially since we're at the beginning of the month, where the U.S. dollar yen, this little sell signal that's going on from yesterday and is following through today, may be setting the trend for a while, especially because, remember, the Fed, they cut rates again, you know, just recently, where I thought they were going to hold off another month, and then they also came up with the follow-through that they're likely to pull some more bullets out of their pocket.
Right.
So the bear, the U.S. dollar yen bear, I think it's back, even though we have trade talks coming up next week.
Yeah, no, you know, it's so intriguing to me that I mean, gold got smoked last week, but it came right back. And, you know, when you're looking at the gold market, I mean, it's amazing we're still at 1,500 and the dollar's at highs. So it's like, okay, you know, if the dollar gives it up at all, you know, you're really going to get some action here.
Yeah. Sure.
You know, but each and every time that it seems to come off a high, we haven't got any follow through on the way down yet. You know what I mean?
Right.
So.
Now, here's the other interesting thing. Like I said, the dollar index today showed all the strength overnight, and then coming to our market opening, all of a sudden it's falling back a little bit. I think that this might be a good inflection point, because yesterday the euro spiked low. Now, that market's been trending lower for the past month and a half, okay?
Right.
Pressing that lower boundary of support. And it's usually when it gets to this 108.5 to 109.5 area, that's where, no matter what's going on, the euro seems to find a base and gets another like rally. I don't know why, it just seems to be it.
Right.
So yesterday we had a piercing line formation, another Japanese candlestick signal, you know, and initially the euro US dollar was lower today. It looked like that signal might fail like it did in the Swiss, but it didn't. Now it's higher. And then the pound also did the same thing. It spiked low yesterday, and I think it's slightly lower right now, but it's at the upper part of its range. And it's actually, if you look at it,
yeah,
it looks
is. I can see it. It rejected that 1227, right? You're at 12303 right now. Yeah.
Right. And remember I mentioned the U.S. dollar Swiss? I looked at the Swiss versus all the other major currency crosses last night. The Swiss was totally strong. So all of a sudden this morning, we get this snapback, like it's like a knee jerk. I think that you might see the U.S. dollar Swiss turn around in reverse gears. And if it does, then I think you'll see a sell-off in the dollar index for at least like a week or so as we head into the trade talks.
Yeah. Man, there's so much different movement. I was listening to Bloomberg, and one person was bringing up the chart, and then the other person was saying, well, I think it's pretty easy, you know, and it was a fundamentalist, but when they said it, it was just amazing. And what it was is that they said, well, if you go back to like 2000, and trade in the U.S. dollar was like $1 trillion, all trade around the world, right? Mm-hmm. If you come to today, I forget what the number was, but it's like 5 to 7 trillion or 9 trillion.
Right.
I mean,
I think you told me it was 16, but whatever it was.
It was outrageous.
Yeah.
I mean, it was like, and you know,
said, wasn't everybody using the dollar in 2000?
Yeah.
What, right? I mean,
no,
that's,
totally.
yeah, of course
and
they
so,
were. Yeah.
you know, it was like when you're looking at that aspect, I was like saying, well, is there only going to be the dollar left? I mean, if that's what all trade is, and she wasn't just talking about the United States, she was talking about 2 foreign countries outside of the United States still trading in U.S. dollars.
Sure.
You know, which you can see why it's going to make sense. You start trading, you know, and all these other currencies, man, you better have it hedged out in a big way, right?
Well, ultimately, everybody wants U.S. dollars. Even if they're using other currencies, even in multiple currencies, eventually they want to somehow cash out into dollars because it's always the most stable currency.
Right. Hey, you know, let me ask you something. Before the euro came in, I know you were still trading currencies then. That must have been really wild, right? That there was all these different currencies, right? Yeah.
Absolutely. The D-Mark, well, that was when the D-Mark was a really big deal.
I see. Okay.
So I remember when I was on the trading floor at the Merc that the currencies, when they still were flying in the futures pits back in the early 90s, the currencies were crazy. I mean, they were absolutely absolutely nuts. And the D-Mark pit and the yen pit, those were the two biggest pits there.
Were they? Okay.
Yeah,
Okay.
the D-Mark was the big. I mean, the pound had huge volume, but it wasn't the most actively traded contract, except for when it was really busy. But on any given day, the D-Mark, that thing was crazy. And that was before you had an EU. That was when it was just Germany.
Sure, right,
so
right.
That also reminds me, we have tomorrow retail sales coming out for the EU, and that's a big deal because they just downgraded all their forecasts for GDP and all these things for the next year for the EU. So if they get a nice positive spike for retail sales, which would obviously be coming out unexpected, then that would help to fuel this little bounce in the euro US dollar that might be starting to form right now.
Yeah. And, I mean, you can see the S&P, I mean, the indices are getting smoked out here today, and it's really going to be interesting to see, okay, what does that do to the currencies, if anything? Do you know what I'm saying?
Right. You have those trade talks coming out tomorrow, and remember, Boris Johnson was speaking, and there's a whole nonsense now with Brexit going on. You have this timeline. We're 3 weeks away from Brexit deadline. We're 3 weeks away because next week is the trade talks, and we know next month there's a bunch of deadlines for that too. So we'll see if they manifest. So
never-ending cycle of news right now, man.
Amazing.
Yeah.
Listen, folks, every trading day, you can go over to forex-trading-unlocked.com. Check out Teddy, forex-trading-unlocked.com. Teddy, you have a great week, safe week, man. We look forward to speaking next week.
Thanks so much, Teddy.
Thank you.
Take care, man.
Good morning, everyone. This is Teddy Keckstedt from Forex Trading Unlocked, and we're here today with a Forex market breakdown for you. And before we get into everything, we just want to pull up our disclaimer here to remind you that this webinar is for illustrative purposes only. All right, so let's start off with our economic calendar, and boy, is it bare. After having literally 2 months of crazy central banks, and obviously there's your monthly economic numbers. The only one that really is going to pertain to the Forex markets and the currencies this week, or for the remainder of the week, rather, is tomorrow's U.S. GDP number. Obviously, GDP is one of your bigger economic numbers. There is other things going on in the world as far as speeches and things like that, but they're more geared towards political and just geopolitical stuff, that it's more noise and canceling. It's not about anything being decreed or set in motion. So as far as the fundamentals in the marketplace, we're kind of in a spot where we haven't been in months. Actually, we have a week that even the beginning of this week, nothing is really major. So it's more relying on technicals. So with that, let's get off this calendar page. And let's start off with one of our biggest currency crosses, the euro US dollar. So what has we got going on here? Well, we're waiting for a breakout. The market's obviously been trending lower from the summer into the fall, and as we headed towards the end of the third quarter, and it's really been consolidating. Now, if you look at these two yellow lines, those are our major up and downside pivots as far as waiting for a breakout. Above 111.07, that would be making higher move highs, and it would also be breaking the downtrend that the market's been in for a few months. Basically, this market's been sideways for a year, but in the short run and the intermediate term, obviously it's been under pressure. Now, if we get a breach of that 111.07 and start to get a little bit of a bullish move, I wouldn't be over confident that the market is turning. I think it would be just more of a bit of a strength in the euro overall that probably could be happening, especially as we start to head in towards the last few weeks, going in towards the Brexit announcement or Brexit move, whether it's hard or soft or whatever, not going to be extended. I don't know right now. That's why we didn't talk about anything on the calendar, because it's too confusing and doesn't mean anything. Now, as far as below that 109.27 pivot, that's our failure, which would mean a lower move low, and that would be also a continuation of downside momentum for the euro US dollar currency moving into October. Now, do I think that's going to happen right now? I don't think so. Right now, we've been sideways. If you look at the range over the past week and a half, you've been trading in just over $1 range where, I mean, every day it's like it's up one day, it's down the other day, and the bodies of those days are just, there's nothing to be seen there. So we have this little elliptical area here. So even if we go sideways and we take a downward sloping blue line, which is downward sloping resistance, that doesn't mean it's a breakout because of taking it. That's just by attrition. And then also, if it's contained within these pivots, we don't have a higher move high, we don't have a lower move low. So just on the basic, easiest fundamental technical, there's nothing to go with. So for range traders, you may be looking at a really nice window for the euro US dollar for the next upwards of maybe a month as we head into the fourth quarter, and also the end of the Brexit deal. And that's something you have to think about as Brexit, whether it does or doesn't happen, we're getting closer to where the euro and the pound may start to really consolidate, and it might start winding into a range trade. So be very careful trading the trend or any type of anti-trend move, actually, as far as how much volatility you'll get. Now that anything can happen, obviously, we can get a major bounce in the euro US dollar and the pound or whatever. But right now, in order for the euro US dollar, I think, to get any really major traction to the upside, you would need to have weakness in the US dollar. What would do that? Well, it could happen with as far as like the GDP number that comes out tomorrow, but that would be a short-lived move, not something that I would look at in term. So as far as with this chart and for euro US dollar traders, if you are a bull and you're looking to buy into a dip, I would say then, as long as you're somewhere above that 109.27 pivot there, you're fine. Anything below that, I would be very, very cautious. Being a bull, I think you'd be, well, you're obviously going to get buried by the momentum of the trend that's in place right now. And then also that would also have us buffering some really key support in the euro US dollar, which gets us down towards that 108.5. But that's only if we take out this 109.27 pivot. So outside of that, I think that you have to keep your trading tight. If you're already in a position, just work it and use those pivots as something to base off of, maybe perhaps for risk parameters. But just look at what the chart is already showing you. It's been very sideways. It's been very tight. There's not much movement overall in any day's trading. So with that, let's move on to our next chart. Now here we have something we can talk about. So we have, this is a current chart from just before this webinar was taken. Today we are making newer move lows. So it looked like the market was consolidating for the British pound US dollar. But now we have definitely confirmed a weakness in the trend, and at least a corrective move is in place right now after today taking out the low from a couple of days ago, over the past couple of days. Now we have back here set on Friday, we have a Japanese candlestick pattern, which is called dark cloud cover. So that's typically when this occurs, you have typically a short-term break in the momentum of whatever is going on as far as the bullishness in the market. Now, does it mean a total change in trend? No, not necessarily, but it does usually indicate a point where you're going to have a little correction. And right now, that is occurring right now. So with this signal, we have three pivot prices for strike prices that you can look at as far as risk levels for both being a bull and a bear. Now, if you're a bull and the trend is your friend, you got to remember the upside momentum is definitely here over the past month. If you're looking to buy into this trend, you might be setting up for a good buying opportunity. So where would you look? Well, right now, obviously the market's going down, so you'd be looking to buy possibly lower. So right now, if this correction is going to happen and it's going to kind of continue and this downside momentum will continue, the projected price with this signal here will take the 50% of the total move from this low to this high. So that would put us down at this 122.63 area. Now, what's the likelihood of the pound US dollar getting down towards that target? Well, it doesn't take a lot of US dollar strength to have pound weakness, because we know that with the Brexit deal, things obviously were getting closer to the October 31st deadline. But also what happened this week was that Boris Johnson was overturned by their Supreme Court equivalent, and now Parliament is back in action. So that's probably why we have this current sell-off, especially with today, because today was the day the Parliament went back into action. So what's going on there? What does it mean? I don't know. I'm not from the UK, and their politics confuse me just as much as ours do. So, but what I do know is that most likely that the sell-off is because you have a changeover in power. Boris's power is now restricted back to being prime minister and not being able to act without the restrictions of Parliament. So does that mean that this market's going to totally tank and go head back and take out the lows from early September? I highly doubt it. I think this means that the momentum that Boris Johnson had going in towards this Brexit deal has now started to wane. I mean, after all, the beginning of September up to through this rally, this was all because because of the proroguing. That means to suspending Parliament. So now that that is now canceled, you have to assume that probably whatever was built into this bullish momentum with what is going on with the UK and Brexit, there's going to be a little profit taking that's probably going to be happening here. So with that being said, let's look at these levels. If you look at these green pivot lines, we have $1.2475, $1.25 quarter, and $1.2575. So these strike prices are right within the range of this sell signal that occurred. The last one is just below the high. Now this high would be your risk level if you are a bear. Anything above that means the sell signal is over and it's or it's negated. So right now, how far does this sell signal going to go and take this market lower? Well, who knows? I don't know. Everyone has their own different price projections, formulas and what have you. I just use the 50% level here as an arbitrary target, especially for a correction target, because it falls just into this area where we had a consolidation of highs and lows, and there was a breakout area. So that looks like a good pivot area for the market to fall down to. Especially now, it also fits in with the political stuff. So this is something where you can use a signal like this also to incorporate. So if you had, let's say you had some sell signals in your own methodologies that are going on over the past few days, and especially with today's break. So the risk levels I would look at now are these strike prices at $1.2475, $1.25 quarter, and definitely $1.2575. Anything above $1.2575 is definitely very strong for the longer term trend. Anything below that right now, I think is definitely resistance until we start to show a turn. Now, right now we are making a lower move low on the daily basis, but on the overall trend, we're just in a short-term correction here off of this high. So right now we had made a higher move high. The key is today, can we take out this low from over here as we are building up? If we still continue to make lower move lows today, and especially start to settle lower towards this 123.5 area, I think that you're going to see a continuation of this momentum, at least probably for the next couple of days as we absorb what goes on with Parliament. You got to remember this. I don't know how much action they can do within one day or how things work over there, but I would assume that today, tomorrow, and into Friday, they're going to be very busy over there, and it's going to be a political hotbed as they really start to hunker down on Brexit and also the Prime Minister as well. So I don't know what kind of retaliatory or cohesiveness is going to arise from that, but I think that you can probably bank on the fact that the British pound, even if they have good economic numbers or whatever, which there's really nothing coming out this week, there's just central bank speeches. I don't think you're going to see any strength coming out of this week with this. It would only be if there's US dollar weakness that I think you'll see a lift. So the downside target here, folks, remember, is this $122.63. And then as far as our pivot points, you use those green lines right there at $1.2475, $1.2525, and $1.2575. Those are kind of your buffers. If you were to take out, like I said, those three pivots, those strikes right there, then you're going to look at an overall bull going on for probably into the rest of October. And if not, and this is a corrective move, then could be a nice little opportunity for bulls to buy this market down and then ride the trend higher if you're overall a bull. And if you are an aggressive short term bear right now, you have a good opportunity where you know where your buffer points are, and where you have at least a decent target level also from this area to capitalize on as far as a move for the bears. Now, if you're a real big bear, I'd be very cautious though at once you get to this downside target area, because if this is just a correction, then the bulls are going to really snap it back as we head into that Brexit timeline in October. So one thing you have to watch and remember is the dollar index that can help you with the US dollar strength and weakness, and also maybe help guide you with this trade. So now let's go to the US dollar Swiss. Now this kind of helps us with that British pound US dollar trade. We have another signal that went off last week, excuse me, in the US dollar Swiss market, and that is a bearish engulfing line. When you have that, usually that's a good indication the market's going to start to pause and not necessarily completely reverse gears, but it usually sets you up for a correction, which it has already. And right now in today's trading, it looks like it's pausing. So we do have some downside targets here for this. Now, the overall trend for the US dollar Swiss has been up for the past month and a half. And also, it has had some violent swings to the downside. Now, this recent slide that you can see that has occurred over the last few sessions has definitely been a nice little correction. And it's heading down towards this lower blue line where its upward sloping support is. Now, I think that you see this first T1, target 1 at 98.20. This is also where it comes in with this upward sloping support. It's a really good, strong area here where is it going to bounce? Well, if it's in channel and it's going to continue to channel higher, most likely you're going to see a bounce off of this blue line somewhere. Now, if you see a failure here, now, yeah, see this new low that was set yesterday, that made a lower move low. So we have a higher move high where this bearish engulfing line came into, and then yesterday we set a lower move low, which definitely makes this market look like it wants to correct. Now, if it's in corrective gears, then we have a good chance that we can probably see this T1 get taken out and then probably get into this downside target range, somewhere hovering around that T2 area, around 97.82. Now, is that overall bearish for this market? You got to remember the US dollar Swiss has been in a bearish market for a while. It's only been in a corrective sideways to higher trade for the past couple months. Now, that probably has a lot to do with US dollar strength and a lot of EU weakness that has occurred. But the problem is, look at where we fell off of. This bearish engulfing line sell signal was right below parity. Now, whenever you hear parity in the currency environment, people are right out off the bat think about the US dollar Swiss. One of the reasons is because the US dollar and the Swiss are the two flight to quality currencies out there. And when you have a relationship like parity, it's usually indicates there's a divergence of other major currency crosses, and that's why that's occurring. So the fact that we have another rejection, once again, this has been multiple times now this year where the market has either just got above parity or has fallen short of parity, and it's reverse gears and headed lower. So that being said, you have a economic fundamental psychological number that we failed to reach, and we had the sell signal. So if this is a corrective phase that we're beginning, then as we go into Brexit, this is where you got to remember US dollar may be strong, but the Swiss right now, because of Brexit versus the euro and also the pound, may begin to start to become a very big bull. So if that happens, you're going to have a divergence of many currencies that have been trending either bullish or bearish to dollar over the past couple of months, and we're going to see a flip. One of the currencies with the highest probability to have this happen would be the Swiss, and we may be seeing the beginning signs of it over these past few sessions. So we have these three strike price lines here at 90 binary lines at 98.75, 99.20 quarter, and 99.75, which is just below the high that was set last week. So I would say that those strike prices are going to be over the next probably week to 2 weeks, and definitely this week. So is this market looking to bounce and get back towards that high and make a run? Well, right now I would say the trend is your friend, and the short-term trend is a bear. So I would look for a test of that 98.20 area and look for a consolidation there. Now, a failure of that upward sloping blue line, that is a good indication that this correction is more than just a short-term, correction to maintain this obviously bullish channel that it has been over the past month and a half. So that puts that 97.82 as a very likely target over the next week or so, and then would be a nice indication of where do the currencies really start to fare when it comes to moving towards Brexit. We have to start thinking about the Brexit trade, because hard, soft Brexit, extended deadline Brexit, whatever, is definitely going to shake up the euro, the pound, as well as the US dollar. So if those three are shaken up, that means the Swiss also will be shaken up. But as far as a European currency, the Swiss may become the flight to quality, even though the dollar's flight to quality because they're all a mess. The Swiss in that zone will become flight to quality. So we might be looking at a divergence trade, which will set this US dollar Swiss to really start to trend lower over the next not just week or so, but over the next month and a half, where we could start to see the market take a dive down towards 97.29 and even come below where we have this target range in lower pink pivots. So these are areas that you definitely want to key off of over the next couple weeks. This is going to be very interesting how it starts to pan out. And it's kind of funny, you can start to see on a week like this where you don't have a lot of numbers coming out that matter for any of the individual currencies or all of them, what have you. This is where the technicals start to come in. You can almost see how big money is moving around. So because it's always moving no matter what, it's acting and reacting to whatever it's doing. But the bigger momentum right now, obviously, is the bears, and the bears have taken over this trend. And this is the first correction in the US dollar Swiss where we've had, you have the signal once that touched it off, but then you have 1, 2, 3, 4 down days in a row. And today, we don't know what's going to happen yet. Today is just a kind of a pause for the cause. Since there are no real numbers, we may be kind of in a dead zone trade for the next 3 days too. It may not be very volatile because there's no reason for the markets to move right now. So then if they're thin and volume is low, especially since we're heading in towards the end of the third quarter, you got to remember that, Friday is the end of the third quarter. So, or we're coming into the end of the third quarter rather. We're looking at the balancing of funds, banks and what have you. So the question is, have they cleared their balance sheets for what they want to do for the end of the month? That may be an issue too that may compound the slide. So I would key off the dollar index also for this currency. And definitely if the dollar index is looking weak, you're probably going to see a little more upside momentum for strength for the US dollar Swiss, which means that this market will continue lower and giving those T1, T2, and T3 target areas a better chance of being reached. Now, over the next couple days, is it going to happen? I don't know. It looks like right now there's a good chance at us testing that upward sloping support line. So key off those pivots and remember that especially above the 99.75, any rally above there is, besides a nice show of strength, puts the market targeting parity again. But we had a rejection, like I said, so it looks like parity is not going to happen, and now it's time for the bears to take over and see how far they can drag this market lower. Okay, so now let's look at our next currency. Now we come to another side of the globe and we're looking at the US dollar yen. So now we have this question, is there US dollar weakness happening now against the major currencies, or is this just where we have divergence? Now I would say that probably what we have is divergence. Remember how we talked about the US dollar Swiss being in an overall bear market with just a short-term rally since the summertime or end of the summertime? Well, that's also what's occurred with the US dollar Japanese yen. Ironically, also look at that. There was a bearish engulfing line that occurred there. So, and the market has trended lower for the past few sessions. Today, obviously reversing gears in a big way. Now for this market, we have downside targets of 106.499, 106.047, and 105.380. Those are fib projections. The downside target area in that ellipse would be a good target range, just because if you look at the bulk of trading that happened to base this market and pop it up for this rally, that would be right in the heart of it. So this market is kind of in a sideways trade if you really look at it over the past few months. But the overall market, like I said, the longer term trend is a bear. So maybe this is a corrective move that to the upside that is now ran its course, and it ended with this bearish engulfing line and is setting the beginning of a new corrective wave, not just a corrective wave lower, but a trend move lower, meaning that the US dollar yen may become a bear for the next not just a couple of days or weeks, but maybe over the next couple of months. So if you're an aggressive bear, then I would say if you look at these strike prices at 107.75 and 108.25, those are good levels for the bears to look at. Now, if you're a bull and you're looking for an aggressive buy, then those would be good areas to look at, because if we take it above 108.25 again, then that means the bearish engulfing line sell signal already had run its course and didn't get to where the more likely target had been, and that the upside momentum is there, and the US dollar is very strong, which would mean that higher move highs would be on the agenda, and we'd be looking to probably go way above that 108.25 area and target the 109 back up to 109.5 area. Now, could that happen? Absolutely. The US dollar has been strong for months, and no matter how this, it's kind of funny, no matter how they try and break the dollar or the euro, you just can't. The euro, even though it's been sliding, it just doesn't want to really collapse or can really trend lower. It just keeps just nibbling away at support, grinding at it, and then getting small bounces. Now, the US dollar yen, if the overall bear trend is really coming back into place, then that means that this nice little rally that has happened with the US dollar yen has run its course and is now beginning a turn, which gives any type of aggressive bears a good opportunity to ride a very good trend lower, which, if we get down towards that target 3, especially down at 105.38, that's a very nice move over the next couple weeks to capitalize on. Now, as far as being a bear and a bull, once again, we have these two strike prices there. I definitely think that if you're a bull, then you're looking at right now, we're looking kind of at the end of a corrective move lower, and this would be probably a good buying area. But think about the steepness of this trend too. If you look at the low that was at the end of August that we've rallied off of up until the last week, that was a very steep trend. To go from 104.5 all the way up to 108.5, a $4 move in the US dollar yen, over the course of a month, a little over a month, without any major real things going on between, especially the US and Japan as far as trade and what have you. I mean, there's been some little tariff tit for tat stuff, but as a whole, everything actually has worked out well, especially for the US and the US dollar. So there's no reason for it to have been in the bear trend like it has been for a while. But then remember, even though the US dollar is the biggest currency out there, sometimes some of your other crosses don't trend the way some of the other ones do. Like the euro and the pound have been under pressure from the US dollar. Obviously, this has not been the case for the yen and for the Swiss over the past year. And then also you got to think about the gold trade. There's been a lot of action in gold and also in oil. So when that happens, that causes a lot of volatility in the Japanese markets. It makes it hard to gauge their economy because they're very reliant on oil, for one, for production and things like that. So these are things to take into account, because we've definitely had, those issues that occurred a week ago. They seem to have, at least in the short run, stabilized. So I think that part of the trade is off the table. But as far as today, we have a nice show of strength in the US dollar. So for your bulls, if you're looking at those strike prices, then those things may be coming in much sooner than later, and this little sell-off that we have may have run its course. But right now, I would say that with the bearish engulfing line, though, that we have, that momentum probably still is going to give this market a little bit more pressure down towards at least that 106.4999 first target level. After that, you're at the top end of that digestive zone that the market had been in when it based. So if this market is truly bottoming, then we should start to find support where, earlier we had a lot of resistance. So then that T2 and T3, that's not going to manifest itself. So for aggressive bulls, I think down to that 106 area, you're good. Anything below there, I think you're cannonballing yourself and trying to fight an overall long-term bear. That is, not the right thing to do. So I would look more, if you are a bear, I would look for selling opportunities if you're not in the move already. And if you're a bull, then I would still wait for a signal, especially a rally back above 107, that first green strike price. If we get back above there, that puts us in the ability to start making a run for those highs. Remember, on a fundamental basis, we just came off of higher move highs with this bearish engulfing line. So bullish momentum is in place over the past few weeks, and then we did make a lower move low because if you see back on this chart right before that high, there had been a higher move low. So we have a higher move high with a lower move low, which means not necessarily a change in trend. It just means a pause for the cause. And if this is just a pause, then I'd be careful with this rally today. It may be the beginnings of a bullish spark that's going to have this market flying back up through those strike prices and making higher move highs. So you never know what can happen. Those are the pivots and the areas to take a look at. And, especially since we have these nice sell patterns from these Japanese candlestick patterns, if they coincide with your sells, if you were on the sell bearish mode because of any indicators or analysis or fundamental forecasting you do, then you have this this signal that still has a little bit of potential life in it. And also does reverse gears and take out the signal and it doesn't reach its target, that's a big signal also for you that momentum obviously is in the opposite direction, and that trend is much more solid than had originally been thought. So with that, key off those key pivots and make sure that you always do your homework and look at the markets, weigh your potential trades, just like we did here. We had those signals that gave us a reason to have a course of direction, as well as to know how to manage our risk with levels very easily and quickly. And if you want to learn more about that, you can always find stuff on my website, www.forex-trading-unlocked.com, or you can find out more about some of the signals when we do some videos on our Twitch TV channel. Also, you can find us there. And then if you want to learn about these signals, you can read about it in High Probable Japanese Candlestick Patterns, available at Amazon.com in paperback and Kindle version. And you can learn how to utilize these buy and sell patterns to integrate, whether you're an options trader, an outright Forex derivatives trader, or a futures trader, or you can be even other markets. They work in other markets as well. So I want to thank you for your time and the Nadex as well. Good luck with your trading, and see you next week. Take care. Good morning, everyone. This is Teddy Keckstedt from Forex Trading Unlocked, and we're here with a Forex market breakdown for you today on September the 18th, 2019. And we just want to pop up our disclaimers real quick from us in the Nadex, just to remind you that this webinar is for illustrative purposes only. With that, let's now jump on to our economic calendar. So we have a lot of things going on with the central bank sector, as well as a lot of major economic numbers that are coming out for some of your major currencies around the globe, US dollar being number one. But then also we have the pound, the euro, the Canada, and the Aussie also. So right now, what's going on with these major crosses? We have the pound that's kind of under siege. The euro, is it a sinking ship or not? We don't know. We have to figure that one out. We'll look at the charts. The Canada, they're waiting for
calmer waters, I think, actually. The Australian dollar has been kind of a bear. Let's see if there's still a reason to stay one. And then we also have the US dollar, which is kind of just an under. So let's see, today we have for the British pound, we have retail price index, PPI and CPI. That's a big basket of technical numbers coming out for the economy. For the euro, we have the EU CPI and we have the ECB with a speech with one of their members talking today as well. Now for Canada, we have the Bank of Canada CPI number coming out, as well as in the US dollar, we have the FOMC meeting that comes to a close this afternoon. Now we know that central bank time, Fed time, typically means that the markets either dry up or we get very skittish volatility. So please be careful and be very mindful of your trading today and over the next couple of days with that. Tomorrow we have for the Australian dollar, we have the unemployment number. For the Japanese yen, we have their central bank, the Bank of Japan, interest rate decision. There's also a press conference afterwards, and they have their CPI number that comes out. My guess is that you're not going to see very much come out of the Bank of Japan tomorrow. If they were to cut, let alone raise rates or do anything, it would be a shock to me and probably a shock to the market. So be aware of that anything that they do something could, at least in the Japanese yen, US dollar, and crosses that are impacted by the yen, they could see some volatility if they do something. If they don't, it's more of the same. That's probably what's factored in. Then we have also in Europe, we have the Swiss. For the Swiss franc, we have the Swiss National Bank interest rate decision. There's another one that's probably going to be on hold. I'm sure they're going to watch to see what the ECB does more than anything until there's really a reason for them to pull the trigger. Then we have for the pound tomorrow, we have retail sales and the Bank of England interest rate decision. With everything that's going on in the UK, if the Bank of England makes a rate cut, which I don't really think them doing, there is a little bit of a consensus that they will do some kind of easing. But I really think that with everything that's going on with the pound right now, and especially since there's been a show of strength versus many currency crosses, the odds are that the Bank of England is probably going to sit back and see what happens for another month and just have some verbiage on what's going on. Then tomorrow we have the US dollar, Philly Fed manufacturing survey, and existing home sales, two big economic numbers. Obviously the manufacturing sector, that's one to watch and see how that is, if there's any type of slowdown or acceleration. And then we have existing home sales. That is definitely always a big number. It's an interest rate number, as well as an economic number that can have an impact on the currencies as well, especially because we'll be in the wake of an FOMC meeting. So, and then on Friday, we still have a couple numbers that affect the euro. We have the German PPI, and then we have for Canada retail sales. So the Canadian market, actually, we have a bunch of stuff going on, and that's pretty interesting because usually there's not that much that we really have to, or not that the numbers don't matter, but they're typically just not as impactful, if you will. So let's look at our first chart and see what's going on. So we have the euro US dollar here. Now the market's been in a bearish trend, obviously, for the whole summer, going into the last month of the third quarter in September. But we've had kind of a balancing going on. And if you look, you can see that we have these three pivots here, and this lower one here at 109.28 is just off of this little bit of a higher move low here. So now, as far as direction, we had, obviously, everyone's aware of the fact that there was a bombing in Saudi Arabia that affected the refinery that caused a surge in the oil markets. At the same time, it caused a flight to quality rally in the currency markets. And you can see that this chart was from today. Today's market is slightly lower. Yesterday had a rebound, but Monday, you can see this big red bar, just 3 bars in here. This was the sell-off on Monday, and it looked like all of a sudden the bearish trend was going to really be impacted by the attack that had happened. Now, it's kind of funny because nothing except there was an attack for sure, but we hadn't even had complete transparency on what was going on. So there's a tendency for markets to overreact, and you can see that yesterday the market came all the way back. It made a little bit lower of a low than it did Monday, and then came back to settle above where it opened up yesterday, or the prior day. So now today we have it going nowhere. So what does this mean? We have this little circle here of a digestive range. Now we have a downward sloping channel line here for the bearish trend that's been in place for the past few months. By attrition, we could just go through this and start to go sideways. Right now, we do have this bottoming situation that has occurred already because we had made a higher move low and we had also made a higher move high. So key off these two pivots here, I believe, for direction. Any failure of 109.28 will most likely mean that the bears are back in full force, and also the euro is going to be under pressure for whatever reasons start to spark that move. Then above 111.06, we kind of get back into a neutral trade, back up towards targeting this 112.15 pivot. Now, right now, because we have all these numbers and central bank decisions, I would be very leery of any type of moves that occur today, because you're most likely going to see some reactions to if the FOMC meeting in the US especially does end up with a rate cut. Remember that 2 cuts were factored in before the end of the year at the beginning of the summer. We've had 1 rate cut. Is the other one coming? The pressures are there for the Fed to do it, but the Fed doesn't need to do something because the rest of the world wants them to do. They should be doing what they believe is right for the Fed and the U.S. economy. So I think that still the odds of it happening are still a little bit slimmer than likely that they will. That being said, I think it's factored in already to the markets, and there's no reason to expect, should they not do anything, that we're going to have a big reaction. Now, should they cut, that's where we may have a big knee-jerk reaction. So I'd be very careful whether you're on the long or short side, because we could have, that's why I have this digestive trade here. As we go sideways by attrition, we will take out the downward sloping channel of the trend for one over the next couple of sessions as we head into the end of the month and the beginning of October. So just a sideways trade, which the euro has been basically doing for the whole year, just now it's finding its, tightening its range to the lower part, this 112.5 down to 109 area. So I think we're going to have this coming out of this. We're going to have, we're coming to that line in the sand, if you will. If the Fed does cut rates, then that means that the dollar perception of interest rate cuts will be over. Then at that point, it will be a rebalancing. So everyone that had been riding that wave, you may see a profit-taking wave that occurs if the Fed was to cut rates today. So all in all, if you are not in the market, I always tell people, if you're not in the market going into a central bank meeting, wait until it's over to go up, fight, play golf, watch a movie, do whatever you got to do, go out to lunch, and then come back on Thursday morning. So, but if you are in the market right now, or you're looking for a play, I would look for a volatility play, and definitely use these keys. If you're already short, then obviously this 111.06 is an area to be careful of. Any rally above that would mean higher move highs and short-term bullish strength in the market, and definitely targeting that 112.15 pivot. Below the 111.06, I'm not necessarily bearish, because you got to take out that 109.28 to really set off the bears again. Above that 109.28, you're looking at basically a sideways range trade. So what kind of trades do you have? Well, if you're short, I would say keep your risk, especially with the all these Fed central bank meetings. Keep it tight. Be very leery of trying to hang on to shorts above 111.06. If you're an options trader, I would say that there's key strikes around 111 even, and then 109. Those are the ones to trade off of. And look, anything in between there, you're probably looking for the market to chop around. That's why we have the digestive range. So now we have figured out that so far we have pretty much euro weakness, US dollar in flux. Now for the pound, we have the pound US dollar, and we have this digestive range as well. Now they had an explosive move on Friday that capped up, which made these newer move highs. Then Monday it fell off, and then yesterday we had the reversal and made a higher move high. So unlike the euro that just did kind of a knee-jerk reaction sideways, the pound pressed higher move highs yesterday, and then now it's going lower, which is pretty much to be expected in the as we are in front of the FOMC meeting and the other central bank meetings that we were talking about. So right now, this market is a short-term bull, meaning dollar weakness and pound strength, which means a lot. So for instance, after this FOMC meeting, if they do cut the rates, then that would mean that, like I said in the last slide, that the expectations of another rate cut are off the table. You may start to see some profit-taking moves, which would then probably be negative for the dollar traders, meaning that other currency crosses, especially if they're bulls, will probably run, as well as you might be seeing some turns in some other currency crosses. So we have to wait for the decisions before we can react and figure out what's going on. But let's look at these pivots that we have here. We have this 125.06, which is just off the high from Friday. And this is where I have your upside arrow. And then we have this purple pivot here at $122.85. So this is the last higher move low. So should we see a break below this digestive range and take out this low here? Is it bearish to pound? Not necessarily, but it probably means that that we've begun to set off of this low that we made at the beginning of September could become the area that we're going to start to see this snake around in as we head into Brexit. So if you look at the end of this digestive range thing here, of these ellipse here, this is right before we come into the Brexit deadline, which that would probably be where that last week or so would be where we start to see a pressing of the resistance or support. In lieu of that, I think that over the next couple of weeks, it's more likely that we're going to start to see sideways action develop and kind of a little swing tradey situation. So right now, I would say that if you are an aggressive short, obviously the high from yesterday would be where you don't want to be long above, because this is definitely in a short-term bull market. And the one thing about the pound, as you see, like last Friday, we had this explosive move and made new highs. The same thing happened when it came off of this low here. The British pound, like all currencies, when they trend really well. Oops, sorry about that. And the pound especially has explosive moves. For it to have, if you look at the distance of the range that was on Friday, you have it down here just above 123 even, and it goes all the way up to 120. $2 move in the currencies, not that it can't happen or is unlikely, but it's more likely to happen in a currency market like the pound. When the pound starts to move either up or down, it's a freight train. I don't even know if Superman would have an easy time stopping it. So just to pay attention to those potential situations. So if we make a run for new highs after these economic numbers, and especially the FOMC meeting, any rally above $1.2506 would be something I would say, if you're on the long side, ride it, and if you're on the short side, you should probably be if you're not out, you should be getting out. So there's a key pivot there at 125.06, and then below that, definitely it's only below $122.85 that the bears start to become an issue, and then we're probably going to target this 121.54 area. And this would be where I think you're probably going to see the bottom end of a slide, because right now we set the low in the beginning of September. We've made higher move highs going all the way now into mid-September. So for us to have a corrective break that would come down towards this purple pivot here, which you can see is near a previous high, that's typically a normal market situation and is not unlikely to occur over the next few sessions to another week or so. But I do believe that as far as directional wise, to key off of that pink pivot there at $122.85, and then the upper green pivot line at $125.06. In between there, then that's for your range traders and options traders to exploit those strikes near those levels. And then obviously to exploit any type of rally above or below those pivots as well. Now let's look at the Australian dollar, US dollar. Now this market, it's kind of ironic that we talked about the surge in oil and what's going on with that. So what does that mean when that happens? Well, typically it means flight to quality for the dollar. So that means that, let's say, for instance, this market here, Australian dollar has been rallying just like the pound has. It made a higher move high last week, and it still had positive sessions in the wake of turmoil in the Middle East. However, it does mean typically dollar strength, dollar weakness, or other currency weakness in this situation. especially a country like Australia that has to deal with China and what have you. In China, we know the oil supply is definitely reliant on Saudi Arabia. It's one of their major suppliers, which impacts obviously their trade and their economy as well. So in the short run, that's probably the situation until it's resolved, or at least is quelled, if you will. You're probably going to see a little bit of pressure on the Australian dollar, US dollar trade. So I have these two, we got this major pink pivot here at 69.09, and then we have 68.97. So this little resistance band right here. So below it, the previous high from a week ago, I think the market is definitely set for a bearish correction. You can see that it's been riding this 68.31 lower green pivot here. And this, I think, is your line in your sand. We bounced off it yesterday and settled positive. And then we turned around, and now today we're pressing this level again, and we had taken out yesterday's low. This is a negative indication that most likely we're going to see a correction, probably still kind of touch down to 68, maybe down to 67.5 area over the next week or so. Right now, because of central bank action, I think that the market's kind of skittish and sideways. But once we get through today, especially with the FOMC in the US, and then tomorrow with the other central banks, I believe that you're going to see some free-flowing swing trading where the bears are going to probably start to pressure this market. Another thing you can use as a gauge for this is to watch the dollar index. The dollar index looks kind of like it's ready to start turning back on a bearish direction for a little bit. So if that does happen, then that would change this outlook for here. But if the US dollar index does start to become a bull, especially after the FOMC meeting today, then I would say that the bears have a good chance in one of these currency crosses to take advantage of a slide, meaning a bearish move for the Australian dollar, bullish the dollar, and then we could probably see a break below the 68.31 pivot, which we are just treading above right now, and then come back towards the 68, even to 67.5 area. Remember that the Royal Bank of Australia has not cut rates yet, and they have been expected to do so for the past couple months, and they have not yet acted. So that's another thing that's also factored into the trade, currency cross. So right now, let's look at these pivots one last time. So if you're directional right now, I would say that being on the short side is we're in a corrective mode. Overall, we have obviously had a nice bullish turn over the month of September. Right now, we have every reason to believe that we're going to be testing support more than resistance. But if you're not directional and you think we're going to hold this range and have a lot of indecision, then the 68.97 down to 68.31, that's your key pivots for a range to trade off of for strike prices, and definitely for breakouts. Anything above 68.97 means that we will be making higher move highs after a higher move low, which would indicate strength in this market. So definitely, if you're bearish, keep that in mind. If we take out that high, that's a very big reversal. So keep your I think that if you're bearish, make sure you're really, really tight with your risk. And then if you're bullish, well, you know where to look out for a breakout. All right, so now that we've covered those currencies so far, let's look at the US dollar Swiss. So right now we've been talking about some major currencies, and the US dollar Swiss is one that even though we mentioned that their central bank is going to meet, odds are is that they're probably going to do nothing. It's going to be more just a exercise in verbiage. Obviously, the trend for the US dollar Swiss has been positive. I think that's more of a relationship because of the strength in the dollar index. If you see, this has been a very big swing trade as it's been going up. The market grinds higher and then sells off extremely within the 1 to 2 day period, and then grinds higher and then sells off again. Right now, we're running just below parity. That's that magic word that you hear all the time. And when you hear parity, typically it means US dollar Swiss. So is the dollar strong enough to overcome resistance and make a run for parity again? Well, anything can happen. The trend is your friend, and that's where it's looking. But I think what you're going to most likely do is have a trade like what's been going on over the past month and a half. It's more of the swing trade action. The one thing you have to key off of, though, is this 98.57 level. So right now we're trading a dollar above that. If the market obviously continues higher and takes out the highs, we have higher move highs, very bullish. But you can see that this has been channeling pretty evenly for the past month and a half. So if history repeats itself, then as we get through the central bank action, we may spike high, and then we're probably going to start to, by attrition, go sideways to lower to come down towards this upward sloping blue line. Now the key is maintaining these higher move lows. This critical one here at 98.57, obviously it comes in at the upward sloping support here, but before that, if it comes down, it's definitely would indicate a negative short-term signal, because we would have a lower move low. Now, the first time you poke a lower move low, does that mean the market's going to tank and we have an epic bearish move that's going to unfold? Not necessarily. We still have this upward sloping support line. So right now we're kind of ripe for a little bit of a sell-off and a test of the 68.57 level. And whether we bounce here or not, what I think is going to be what's going to decide the fate of the US dollar Swiss as we move into the end of the third quarter and into the fourth. Remember, Brexit is coming as well. So as far as dollar strength, we're going to really need something to drive the US dollar higher to, I think, maintain this bullish move that's going on right now in this currency cross. So as far as bulls, I think right now, if the trend is your friend, key off this 98.57 level. Anything below there, I think that you're either looking for a digestive phase where the market's going sideways, or a potential correction back to the low downside. And remember that even though it's in a short-term uptrend, it's actually in a longer-term downtrend. So this right now could be the end of a corrective move. And if you check the dollar index, this is another one where you might want to be, if you're trading the Swiss, US dollar Swiss currency cross, make sure you're eyeballing the dollar index. Any harsh turn in the dollar index most likely is going to end up resulting in one of these violent sell-off days, like, or 2-day periods. Now, is it going to reverse the trend? I don't know. I don't have a crystal ball. Nobody does. The short-term trend and momentum is definitely to the upside. The longer term is bearish. So there's reasons for us, especially after this extended uptrend for the past month and a half, to see a slide. Now, a failure from 98.57 definitely will have us, I think, taking a test of this upward sloping blue line. But this level is the one you really got to watch out for. This is the 98.03 to 98 even support band here. We have a major pivot that comes across. That's the green line, and then the purple line is off of these prior higher move lows. Should we come down and test this level and fail here, that would be a very negative indication that, for one, we have dollar weakness and a lot of Swiss franc strength. But a lot of Swiss franc strength would have to come from some issues that are going on in the EU, like a lot of positive things in the economy and a lot of positive tones towards Brexit, and a balancing in the whole Eurozone. What are the odds of that happening right now? If you watch what's going on with Bojo, Boris Johnson, and Parliament, and every other aspect of the UK and the government, yeah, I don't think that's going to happen. So I think the dollar weakness would be the dog that wags the tail to make something like that occur. So that's why, once again, watch the dollar index. And if dollar weakness does come into play, well, then this level here does come into jeopardy. And remember that if we were to turn back down here, that's a rejection of a run towards parity again, which we have been doing. And it's something that right now I think that we're starting to see, is that even if there's dollar strength, currencies, just as the dollar is a flight to quality currency that we could see as it happened over the weekend with the spike in oil on Monday, that so is the Swiss franc. See, unlike the other currency crosses we talked about, the Swiss is also a flight to quality currency. That being said, that even though the dollar is strong, the Swiss could be stronger. So we'll see what happens with that over the next couple of days. Right now, just like all the other currencies, we got the central banks going on, and until the FOMC meeting is done at 1:15, I don't think you're going to see really much action until then. And let's see what the releases are. But as far as for traders here, If you're a bull, keep your stops tight. I think you're already obviously on the right side, but be ready for some aggressive sell-offs. So I would say be ready to just take some profits. And if you're a bear, I'd be very careful until you have a signal, which would be one taking out one of these prior higher move lows. So there's not much really for you there. Now, if you're a range trader, this is the one nice thing is if you look at the bulk of trading over the past, any of these little grouping periods over the summer, we're swing trading. So once you establish a higher move high, like we just did again, even if we maintain the bullish trend, we're looking for a higher move low. So we're looking for a containment range. So if you're an aggressive options trader and you're not necessarily a bear, you can look to trade the strikes right above the 99 half area and around 90 parity down to 99 even area. And then also down here, we have 99 even down to 98 half. Anywhere in those areas, those are strikes I would say that you can work with, and try and trade the digestion, if you will. And then obviously we showed you the failure points. Now let's look at the US dollar Canada, because we mentioned Canada, but are they waiting for calmer waters? Is that what's going on? Because we know that, look at this, the US dollar is a blender. The Canadian dollar had this is overall in a nice uptrend. But look at this. After making this higher move high just above our pivot here at about 33.79, we've had this big sell-off through another major pivot. So what does that mean? Well, the intermediate trend is obviously a bull. Short term is mixed. And now we had this higher move low here. And now the question is, are we making a lower move high? Are we going to fail, or are we going to drive this market all the way up towards the challenge of this buck 33.79 and keep this US dollar bull going? That's a real iffy one. I think that you're more likely going to see a lot of range trading, and even if the momentum stays bullish, I think you're going to have a big spiky trade. Like if you see how this has been trading for the most part since August, except for a couple trend days, it's been a very choppy market where you have good ranges, but it extends all the way to the downside and ends up settling all the way up towards the top, or vice versa. It's a blender trade. I mean, you look at what happened here with Friday, you had a big move to the upside that was kind of reminiscent of what was going on with the pound. But this was a dollar move. And then you have obviously the spiking here with these other days here. So this is about dollar strength coming off of, I think, the oil. But this is also, you gotta remember, unlike other countries like, for instance, the EU or JPY or even Australian dollar, Canada has oil. So what does this situation mean? It means if there's flight to quality in the US dollar because of turmoil in the Middle East and a spike in oil because of the threat to oil supply, well, that means oil prices are strong, which is good for who? Oil producing countries. So Canada, it's a mixed bag of goods. So while the other currencies may start to swing trade off of any Middle Eastern news, I would say that the US dollar Canada, it's not going to be able to ride that because it's going to cancel out any dollar strength that may be outweighed by Canadian benefits from the prior price of oil. So for that, I think you're going to have a really good opportunity now for your options traders versus directional traders. Directionally, I think if we have a failure here of about 32.36, and we have a lower move high that has been established, and then we will be looking for a test of support down here at 130, 134, looking for newer move lows, and then we would have a bearish trend. Now that would mean that we have a lot of dollar weakness and Canadian strength. I don't think we would have to have, besides an oil rally, a lot of things for the Canadian dollar to have a big show of strength. I don't know what would do it because there's central bank action and even the price of oil is going to be outweighed by so many other things that are in the news right now. So for range traders, I think you have a really good opportunity to capitalize on a daily basis. And then even as a swing trader, we're looking to, I think, have a lot of this going on, which is here, like set a range. So I think that you can key off this higher move low, which is on the intermediate term, a higher move low. But then on the short run, if this is a high, this is your lower move low, this is your lower move high, then we're looking for lower move low. So that would be definitely this pivot right here at 131.34 over the next week and a half to 2 weeks heading into October. Any failure here obviously confirms a bearish trend for the US dollar. Only a breach of this upper 133.79 would mean really dollar strength, looking for a challenge of these multi-month highs that would bring us back to where we were before the summer started. Is that going to occur? Who knows? Like I said, with all the other news that's in the going on globally, I think you're going to see much more of a neutral trade in this US dollar Canada market, which is good for options trader. And directionally, I think you have to be very careful and just probably stick to intraday trading unless you are capitalizing off of one of these major swing points. So the last market we want to look at is the US dollar Japanese yen. Obviously, oil is something that impacts them. You can see that we have been railing. It's been a bull here of the US dollar JPY, but remember the overall trend in this market is a bear. So right now this is an upside correction and still remains one unless we take out this upper pivot here, and you can see I have an up and down arrow at the 109.347 pivot price. So anything below there, we're looking to run out of gas and then come back for a test of this 106.75 area, which is the upper part of this range. And we could see support here. It's not necessarily bearish if the US dollar would fall, yen would fall back down on this level. Remember, the overall long-term and medium-term trend here is a bear. So this is an extended short-term bullish move, and we have just made a higher move high here, and then we made a higher move low with a higher move high yesterday. So right now it looks like we're basing. We may not necessarily be topping, but we may be setting up for a range trade. So key off the oil trade and also a dollar index for direction here. I think that the only way you're going to really see a big directional move long term would be a breach of this upper green pivot here at 109.347. And definitely only a failure here at 106.756 would be something that says, hey, US dollar or JPY, it doesn't matter how the dollar is trading against other currency crosses, it's getting weak against the yen, which could occur. It's been happening. It's been going on for a while now. The Bank of Japan is going to meet this week, and we'll see what kind of decision they make. My bet, at least my expectations, is that they're going to do nothing. Remember, folks, 25 years ago, they started the negative interest rate trend. They had their stock market collapse. Right now, the markets are strong. If the Japanese are going to do any cutting or easing or whatever, they're going to wait a while because they've been dealing with this for quite some time. And I think if anything, they're just watching the rest of the world being like, I guess you don't remember history very well. So that being said, with this market, key off those major pivots. We don't really have much more to talk about on that currency. Definitely watch out for the statements that are coming out. And these, remember, besides the central bank meetings that are happening and whether or not they do or do not cut rates, we have a lot of economic numbers that are coming out this week. So it's a mixed basket of goods. I would watch that dollar index to help give you a gauge for these other major currency crosses. So with that, just want to wrap things up. Remember to do your homework, look at the markets, weigh the potential trades, have a plan, always have a plan, and stay the course with it. I'm Teddy Keckstedt for Forex Trading Unlocked. You can always find me at www.forex-trading-unlocked.com. And you can also find me on Twitch TV for Forex Trading Unlocked and StockTwits and LinkedIn. Please like, follow, and share. And if you catch up with us whenever you want to see what's going on in the FX world. And if you want to read a little book that I wrote, it's called High Probable Japanese Candlestick Patterns. It's available on Amazon.com on paperback and Kindle. You can also read it if you're a Kindle Unlimited member as well. And the book has all kinds of money management and trading inputs for you to incorporate with your methodologies, and also can show you how to utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. With that, good luck and be wary of what's going on with the central banks. Be careful with your trading today. Thank you very much. You have a great day.
Good morning, everyone. This is Teddy Keckstedt from Forex Trading Unlocked, and we are here today with a Forex market breakdown for you. And we have a lot to talk about today. It's September 11th, and of course, we want to remember what happened back in 2001 and not forget about the That's the thing that would happen to the markets also. Everything went really slow and dead. Luckily, we recovered from all that, and we are done, moved on. Hopefully it never happens again. So respect and to all those that suffered through that. Anyhow, our disclaimer today, just for you to see real quick, is to remind you that this is for illustrative purposes, and this is the Nadex disclaimer also that's sponsoring the webinar that says the same thing. So with that, let's jump into our economic calendar. So for September 11th, we have for the Australian dollar, the Westpac Consumer Confidence Number. For the US dollar, we have PPI. For the Japanese yen, we have PPI and machinery orders. There has been a little slowdown with the GDP number for the JPY that came out this week. So a lot of interest will be focused on what happens with the PPI and machinery orders numbers today for the JPY. Tomorrow, Thursday the 12th, we have consumer inflation expectations for Australian dollar. We have US dollar CPI. And then for the euro, we have two very big numbers. We have German CPI, harmonized index of consumer prices. And then we also have the ECB interest rate decision and ECB monetary policy. This is one that's very questionable on whether or not they will or will not be cutting rates. We know that there's definitely most likely QE initiatives that will be taken. Because the numbers have been very mixed to weaker for the EU economy, as well as with the Brexit issues that are going on, it will be definitely a number that the markets will be hinging on. And I think that like US Fed numbers, when we're waiting on a rate decision, currency markets in those particular focused currencies typically start to not necessarily drop, but tighten up. So be very weary or very leery of the trade for the euro US dollar currency cross over the next 24 to 48 hours, because we could start to see some algo spikes and erratic low volume moves before the rate decision. And then we have also two major numbers coming out on Friday as well that impact the euro and the US dollar. For the euro, we have the Euro Group meeting, which I'm sure will be digesting the ECB interest rate decision on Thursday. And then for US dollar, after we have these major three-letter acronym economic numbers, we have the retail sales and the Michigan consumer sentiment. Retail sales is always a big interest rate and currency number. Michigan consumer sentiment, that one will also be pretty big this time around, just because of the pressure on the Fed for cutting rates and as far as how the economy is going. So a surprise positive pop there would probably help to neutralize and calm the waters. Only a really negative number, I think, would then probably help the bears and the hawkish people fuel their agenda and momentum. So with that, let's look at our first chart. So here we're looking at the euro US dollar, and you can see that this morning it actually has had a little move to the downside. The bears are taking control, and obviously they're reacting off of the first round of numbers for the EU, and also you got to remember they're pretty much getting ready for the rate decision tomorrow. So now you can see here these pivots, these yellow line pivots at 111.62, 110.26, and 109.28. That lower one is the most recent lower move low. The market is definitely in a bear trend. We have Brexit coming up on October 31st, the deadline. We have obviously the ECB meeting tomorrow. The question is, how hawkish is the ECB, and what kind of forecasts are they going to lay out for the future moving forward after tomorrow? So if you look at these pivots right here, you can see the most recent high from a week ago at 110.84. So I think that's a key directional pivot. As far as because if we get above that, obviously we'd be making a higher move high, which would be short-term bullish to neutral for this market. The slope you can see from this market so far with this downward sloping blue line has been fairly decent. This is a steady trend lower, so it's not radical. So is it very likely that the bears and the trend will continue? Well, the trend is always your friend, so you want to stick with it until you have a reason not to follow it. Now, I have this target range here that comes outside of this downward sloping resistance line. Since we are coming into the Brexit talks And the irony is, if you look at before today, we had 5 sessions where the range had held within pretty much the range of when we set this high right here. Very tight. If you were to look at the highs and lows and do the math on it, the average range basically is within 60 pips. That's very tight, especially with a lot of the numbers that came out at the end of last week and with what we started with this week. So the euro US dollar is in a very, very conservative trend right now, which means I think it's neutralizing. It's been sideways for the whole year, obviously looking bearish on this because it has been eroding from the 114 level down to where we just came recently down to the 109.28 level, and it took how long to do that? It took over 3 months to do so. Usually anyone that's familiar with the euro US dollar knows that it could have a $3 a week, let alone over a few months. So outside of a few days like today where we're actually getting some movement and directional movement, most of the trading for this market has been very tight. And as we head into the Brexit decision and what's going on between the euro and the pound and the pull between the trade barriers, trade talks, I think that this target range is very likely to be where the bulk of our trading is going to be happening over the next couple weeks. Reason being is that unless the ECB does something tomorrow or comes out with something really negative, I don't think the euro is going to be able to keep on pressuring support. You might got to remember that they've tried to beat down this currency for every reason under the sun for the past couple of years, and once it gets 109.5 to 108.5 area, the market typically bottoms and sets a range. It doesn't necessarily set a new trend higher, but it usually buffers that support and then starts making pops back up above the 110, 111 area. So for it to go into this target range, this would be one of the highest odds of where you're most likely to see the bulk of trading. So for directional traders, you're probably going to have some issues over the next few weeks. You can see that, like I said, the range has been very tight. So you have to look at these pivot points and look at those for various trades. So for a breakout, this purple line here, if you're a bull, this would be where you look for a fresh signal. So if we head into this target range, you should be challenging this this last high that we had made here at 110.84. A breach of this level would mean that we would have turned around off of where we're trading now and then take out this high, which would then be bullish. That would take us away from the downward sloping resistance line from the main trend, as well as set a higher move high after holding this low here, which would be very positive, at least in the short run for the euro US dollar. So if you're a bull, I would say you want to wait for a signal because the trend is your friend. So don't just try and catch a falling knife, look for the breakout. Now, any breach of this area here at 110.08 will have the market set for a challenge of this 111.62. And then you have to gauge the factors of what brings it up to that area before you think about any type of follow through. However, sustained trading above these areas would be very positive to neutral, meaning that you're probably going to have some good buying opportunities in the short run. Now for bears, obviously we have a bearish day today. If we stay obviously below this downward sloping resistance line and we do not take out this high, in fact, for a low risk play right now for bears, you probably want to use this 110.084 and this 110.26 levels as areas to be bearish against. And for your risk, I would say 110.84 is a great risk area. So if you're trying to look to sell against, or at least look for what you would risk for your downside, this would probably be a very good line in the sand. Like I said, if we take out the 110.084 level, you're probably going to see a blast up towards this 111.62. So for bears, if you're going to be aggressive, I would say be aggressive against that area. And for range traders, this is where you're starting to look for from 110.26 to 111.62. If we're going nowhere, this will be a feast day for you, because as people play with this pivot here at 110.84 looking for an upside breakout or to sell against, the range traders I think will have a feast in that during this little period here. So right now the market is below that, and it is also heading towards the recent low that we had set a week and a half ago. Now, this last lower move low here was a short-term buy signal. Obviously, it did help the trend for a little bit. So the 109.28 will be a key pivot. So for bulls, this would be your line in the sand for any type of potential for upside trading. If you are below this line here and you are long, you're probably on the, well, besides being on the wrong side, you're probably going to get buried on it as well. The trend of this market has definitely been lower. It's obvious, you can see that. And if we take out this 109.28, remember that starts to put us into this 109.5 down to 108.5 area where the euro has historically found a lot of support, and it gets very spiky down there. So you could have literally moves that slide. Like I said, we had a 60 pip range for 5 days. We could see a 60 pip break within an hour or even 15 minutes and have multiple ones of those hammering down towards those lows before they come rocketing back. Kind of similar to what happened if you look at this low here, how this pounded here, kept making lows and lows, and then boom, it comes rocketing back like a balloon underwater for a correction. So be very careful of the snap. So if you're an aggressive bull, or a bear rather, be careful selling into the lows and even keep your levels tight, because as we make lower move lows and lower move highs, as soon as we take out one of these highs, these pivots here, you're going to really most likely have a swing factor going on. So with that right now, we've figured out that at least for the euro US dollar currency, euro weakness and dollar strength is prevailing right now. So we'll see, is there a turn or is there not a turn? Right now, the euro versus the pound is kind of neutral after having fallen back a little bit because of Brexit. I'd be very careful with the euro US dollar cross, just because there's too much canceling noise. So when something comes bullish in the economy, then they have a negative Brexit thing. When something positive in Brexit happens, you have something negative in the economy, or then you throw in the US dollar, what it's doing. So that's why we're looking for this target range. So with that, let's move on to our next one and look at the pound US dollar. Now this one we had talked about over a week ago. We had this little buy signal, and it resulted in actually a nice little move. And this is when Boris started talking about proroguing, which means to suspend Parliament. And now obviously we have the new argument where Parliament and the opposition to Brexit wants to depose and remove Boris Johnson. Pretty crazy how the guy's hasn't been Prime Minister of the UK for even a full quarter, and they're already talking about trying to have him removed. There's a fight going on right now. That's why we have this question mark here, choppy range trade ahead. Our buy signal, our target zone, it came just shy of our target, which is at 123.88 here, this green pivot line, which is also close to another major pivot. You can see that today's trading is slightly lower. 2 days ago on Monday, we had spiked a higher move high, coming right to where our target was at. And that's why we have this arrow here for up, and then we have this down here for this pivot. You can see how the buy signal had been our new lowest move low on the chart, still a bear trend, and then we crossed the downward sloping resistance. So this is kind of like almost like a precursor to maybe what the euro US dollar chart that we just looked at is going to look like, as far as maybe settling into a choppy trade like this. And the reason I say that is that we took out this higher move high, and look at how we just kind of buffered. So when we had this buy signal, we mentioned this last week, that maybe the pound may still maintain its trend, but most likely was coming into a neutral bottoming area, probably because of what's going on in the UK with Brexit and with Boris Johnson. The way it seemed like he was taking command of the direction of the UK and going into a hard Brexit. Now we have this little bit of choppiness over the past 2 days, and I think that's as a result of the talk about the UK trying to get rid of Boris Johnson and put in a new prime minister and extend Brexit. Now, if this does happen, and this is a big deal, I think this is why we're going to have this choppy range trade. Over the next week or so, the headwinds of whether or not they can remove Boris Johnson will probably, for the most part, we'll have an idea of what direction that's going to happen, whether they can or whether they will. Now, here's what happens. If they do remove Boris Johnson from as Prime Minister of the UK and have somebody, I don't know how the process works in the UK, that would probably be very bearish to pound, and this trend, this overall bearish trend, most likely is going to resume, and we'll probably see the pound coming back towards this $1.21, $1.20 level. Now, if they cannot depose Boris Johnson, then it's likely that we're going to start to build a base somewhere in this choppy trading area here as they try and get an agreement, and then possibly maybe see the pound get up towards this 125, 126 area, closer into the October trade and heading towards the actual Brexit deadline. I'm not expecting a big bullish breakout. I think above this buck 23.88 green pivot line that you will have some support, and look for it to be basing. I don't think you're going to have a major trend rally just because we have too many major conflicting issues going on. I mean, whether you have a prime minister or not have a prime minister, I mean, is Brexit going to happen? Is Brexit not going to happen? There's a lot on the table, and it's too many mixed signals going on with that. Now, there are other crosses, however, where things are different. Remember we mentioned the euro pound. The euro pound is stabilized after the euro being a little weak against the pound for a while, and now we have other things where we look at the pound and say, well, we have short-term strength in the dollar, but you know what? We also have British pound strength against the Japanese yen. So we're going to look at the Japanese yen because that was one of our numbers, or one of our currencies that are in focus with the numbers coming up. So just remember what we talked about here with the pound US dollar trade and even the euro US dollar trade. So first we were looking to see where those currency crosses, what kind of direction we have. So we have pretty much dollar neutral versus the euro, and pound dollar, we have pound weakness and pound strength overall, or dollar strength overall. Short term, we've had a little spike in pound strength with a little bit of dollar weakness. But right now the dollar index is starting to show a little bit of positive action again. So they'll probably keep the pound under pressure and keep it from railing some more. So we'll see how that evolves over the next week or so. This news about Boris Johnson, though, this just came out over the last 2 days. It's a really big deal. It'll be like saying, okay, let's get rid of President Trump, and it's not going to be through an impeachment process. It's going to be he's just really being removed, like now, So that's kind of what they're talking about doing, and that would just add more. Well, they would just add more of a drama to the Brexit drama that we're talking about. And another thing to consider too is that if Boris doesn't get removed, we have a good shot at having a hard Brexit come October 31st. If Boris Johnson is removed, we're probably not going to get a Brexit for at least another year, and that even may be an understatement if it even happens then. So let's move on after that little bit. There's not much more to say about this. Look at those pivots between 123.88 and a buck 23.11 for the range trade, and we'll see what happens over the next week. Okay, now let's talk about a market that's moving. So we have the Australian dollar, US dollar, that has set a higher move high even today as we speak. Now we had at the bottom this last low that we started this rally. Now look at this, how this chart was a bear for a while, and then we just kept slamming and slamming and slamming. And then from August up until basically our holiday Labor Day trade, this market was in a sloppy, choppy, really tight range trade for most of these sessions, except for having some spikes, obviously, to the downside here. And then set this low, and now we have, it looks like normal trading range days, and not to mention we have a trend. Pretty interesting considering that the Aussie had been kind of drifting in this negative trend because the RBA, when the central banks first started cutting interest rates a month and a half ago, was the one that was totally on the bandwagon for this, and they didn't do anything. They was the one surprise, and the currency kept on going lower with the expectations, and now we have what little action they did a couple weeks ago, and has resulted in kind of a mix of what is exactly going to happen. We know that they're hawkish, but they just seem to be a little reluctant. It's like, I think when they first didn't pull the trigger and everyone else was doing it, I think that, and I still stick with this, that the RBA is looking to see how their currency balances out against these other currencies, especially in their trading zone against the yuan, the New Zealand dollar, and also the yen. So, and we're going to take a look at the yen and its relationship to the Australian dollar as well to see if we can get a bearing on that. And I think actually once we do that, we'll start to see whether or not this Australian dollar strength is just a correction against the dollar, or if it's actually something that's beginning to show some signs of a bull in the Australian dollar. Now remember, China's slowdown has impacted Australia because they're a major trading partner with China. And I think one of the things that really has been the crux of that argument, where people have been saying, oh, look at how China is affecting Australia. Well, Australia is China dependent. Because they have been focused so much on trade with China and not the rest of Asia, that's why they've been impacted by the trade wars that have been going on, the tariff wars. If Australia was more diverse, like a mutual fund versus, look at it like this: Australian dollar, instead of they bought stock, and they bought China stock instead of buying a mutual fund, meaning all of Asia, and that's why they're in the situation that they're in right now. However, trade is starting to move around, and there are things that are happening with Australia because demand is picking up for commodities there, and not necessarily from China, but in that trade zone. So that being said, that's very bullish for the Australian dollar, and a little bit bearish for the U.S. dollar in relationship to the Australian dollar. So the trade range here, this target range here, which it's already settled into and now is pressing a little bit higher move highs, I think this is where you're going to be looking for the next couple sessions, and definitely going into next week as we wait for these numbers to come out. Now remember, we talked about the economic numbers that are coming out. We have for the Australian dollar tomorrow, the consumer inflation expense. So that day tomorrow, I think, could be the spike. So if we're railing right now, like we are, and made a little higher move high, a little bit positive on the day, I would look for a challenge of the 69.10 area right here, and see how I got these arrows up and down. I think this is going to be a big pivot. Most likely we'll see a short-term pause if it touches this area. I think that between 69.10 and this lower 68.21 purple pivot here, this is where the bulk of trading is most likely going to be manifesting, I think, for the next 2 days as we absorb the heavy economic numbers. Remember, we have a lot of dollar and major currency, like I always say, the 3-letter and acronym numbers. Those are the big ones that are coming out. They came out last week, and now we're rounding up a bunch into the end of the next couple sessions. That being said, we will have a lot of mixed trading. I think there's going to be a lot of range trading as we head into the interest rate decision for tomorrow with the ECB. And then we have these 3-letter economic numbers. Until Friday, we're going to have to just kind of digest it. However, the trend is your friend right now. So I'd say the bias is looking for a challenge of the 69.10 area. And then I think it's most likely going to run out of gas and settle back down into this trading range here, which is our target range. Now I have this downward arrow here. Now this is the top of this range that we were trading in for a month. If we fail below this the 68.31, 68.21 support band right here, this green purple line here, then all bets are off. Then we're looking at a choppy, sloppy trade that puts us into the lower 68 to 67 half area down in here. So I don't think I think that if you're a bear selling into this rally right now the overall trend is bearish, but the short-term trend has been an explosive corrective move higher. So I'd be careful selling into new highs right now. Only if we fail from here, I think then you're going to see some bearish momentum that you could probably catch a little bit of a slide. But overall, the only way I think you're going to see a major break and also continuation of the overall long-term bearish trend for the AU/US dollar is if we see some kind of major US dollar strength coming into the market. Now, short term, we have a little bit. What's interesting is as dollar strength has popped its head against some of the other major currencies, look at this. For the past since this low was stamped here, it's been a positive day every single day with decent ranges. Yesterday was the first pause. Yesterday looked like there was a short. Now that's because of yesterday, and now we just took out these highs by only a little bit. That's why I'm saying it looks like momentum is running out of gas, and it's time for a little profit-taking break. So not necessarily a resumption of the bear trend, but perhaps a slide back on this to the support band, like we pointed out here, the 68.31.21 area, just to have a little profit-taking and build a little base. And then if it holds here, like before this was resistance, now it could become support, and then we will start to see a little gyration bouncing up between these two pink pivots. And then if we get a breakout above 69.10, then I would say we get a little bit more strength in the Australian dollar. So now we're going to look at the Australian dollar, Japanese yen. So we have strength in the Aussie versus the US dollar, and we have strength in the Aussie versus the Japanese yen. So it doesn't seem like it's just one, it's not mutually exclusive for one currency pair. There's actually strength in the Aussie. So we have the question, Aussie strength over Japanese yen is holding firm. We have this low that was set a week and a half ago, and the JPY bears are capitalizing right now. So we have Australian dollar strength, and we have Japanese yen weakness that is definitely rearing its head with this currency cross. So does this mean that the Japanese yen is really weak? Well, here's what I think we do get from this chart, that the Australian dollar is strong. So this has to do with their, like I said, I believe it all gets back to them not acting on cutting rates a month ago. And because of that, we finally came out, busted out. And if you actually go back a month, you're looking at this major low back here. So this would come into their inaction. And because of that, they've let their currency basically free float and see what happens to the reaction. Obviously, it's been strengthening their currency. Is that what their intention was? Well, in a sluggish economy, I think that their weakened currency has helped them because they've gotten better exports. But since their exports slowed down, it didn't really matter about what their margins were. So a stronger Aussie dollar and stronger exports through trade would be better for their overall economy than having a cheapening of the Australian dollar to strengthen margins. So Japanese yen bears are capitalizing. This being the thing that the Japanese yen has been strong against all of the major currencies for the past few months, including the US dollar. In fact, we've been talking about this for weeks about how the Japanese yen right here and the Swiss franc, while the dollar index has been rallying and strong against other currencies and keeping the euro from rallying and the pound at bay and crashing actually, the yen and the Swiss did the absolute opposite. Now we've had over the past, as you can see today, this is a current chart from today before this webinar was made. We are positive again today. We made a higher move high, which that last chart that we looked at, and we can go back to it, see how here we have made a higher move high today in the Australian dollar, US dollar. So we have strength in the Australian dollar. So for those of you that are trading any of the Aussie crosses, right now, it looks like if you're a bull, you're on the right side. You're probably looking at a very good, strong buying dip scenario. And if you're a seller, you're probably selling into a world of hurt right now. So for range traders right now, I think you're off the table right now. You have to be directional when it comes to Australian crosses. And here's something to look at. Let's just say you're only an Australian dollar, US dollar trader, and it started to buffer and it was looking like it's starting to top. Well, take a look at this chart. If the Australian dollar yen chart is strong, then that means most likely they're also in the same trade zone. That's why we're looking at this. So the strength in the Australian dollar, if it's here in this cross, most likely it's going to leak over into the dollar cross as well. So right now we have this green pivot, the 72.904 level right here. This is kind of a big directional area, and right now we are strong, pushing new highs above it. So I think the trend, stick with it, my friends. And then below it, if we can fail here, then not necessarily is it bearish, which this market has been overall bearish for a very long time. But after having set this newer move low back here in August, look at what kind of a range we came all the way back, like with only a brief period of digestion. And that was as we established, the direction actually. And we've proven that right now the bulls are in control. And if we get a little correction, I think they're still going to stay above the 72.904 level. Now, even if it falls below there, then we're looking at still just a choppy trade. Only if it fails from this last low that we started this rally off of at 71.08 would I say that we have a true bear once again in the Aussie dollar Japanese yen trade, which it has been for months on end. But right now we could be in the beginning of a bottoming to change in trend. We don't know. It's going to take months, the next couple of months to figure out. But as long as it stays, especially above this pivot here, we're no longer lower move lows are no longer in jeopardy, which makes this market neutral to higher. And now we're going to look at the US dollar yen chart real quick. Since we've been talking about the Aussie, and look at this, we have US dollar strength and Japanese yen weakness. So are the yen bears in control? We ask this question again. I say yes. So if you are trading the Japanese yen pair right now, you can look at that pair we looked at for the Aussie, just like we looked at for Aussie strength to figure out how that was doing against the dollar. So now we have this triangle. We went from US dollar, Australian dollar to Aussie, Japanese yen to now to the US dollar yen to figure out the direction and strength. So from this, we have overall Japanese weakness and we have strength in the Australian dollar and the US dollar that we can pinpoint. So if you are a US dollar yen trader right now, because of those other charts, it looks like we have a higher move high, just like on that last chart. And I think we're going to see a challenge of this 108.24 area. That's about it. After that, I think you're looking to see we have this downward arrow. That's probably it. Because let's look at it this way. We've had a big move in the yen against these major currencies. So are they corrective, or are they beginning of a change in trend for the yen? Right now, we have to look at the overall trend is your friend, and right now it's in a short-term correction. So even if it isn't a short-term correction, then we have a really good chance at this 108.24, 243 area as being the high area where we're going. Also, if it is just a correction move, then we're likely to start to fall back towards this 106.87, 876 area right here. And this is where I have this digestion range. So in this green and this little purple pivot here, I think as long as you can stay and bounce above this, you're going to be neutral to higher. Only if we fail here would that signal a slide that then has us targeting this 105.757 area. And do not disrespect this pivot point here, because any failure from here means US dollar weakness is definitely leaking into this market, or it means Japanese yen strength is back under control. So that's the one thing we have to look at. Now, right now, it looks like the US dollar against most of our crosses are kind of neutral. Obviously not with this market. So short term, we're looking for the US dollar to maintain strength against the yen. But look at those other currencies. If there's any weakness in the yen versus those other crosses, then we're going to probably see a test of the support area here, and then we could have the market erode and the bear trend continue again. So outside of that, play out these key pivots for the US dollar yen. Right now, like I said, this is most likely going to go into a digestive range in this area with these numbers coming out over the next 2 days with the potential to still spike up towards this 108.24. I think that's where it gets exhausted and then comes back into this area. So we've made higher move highs. Let's see if we can press them, and if not, once again, I said, just be careful, only below 106.693. Do you want to be careful of being a bull? So bulls are good until you get below this digestive range. If you're bearish, definitely this is where you can start to look to pressure and catch a move. But for the bulls, right now you're in control, but be very leery right here. I would be very tight in as far as your risk area. And definitely with this low here at 105.75, all bets are off for any bulls or bears. So for the Japanese yen, remember, key off of look for potential to still spike up near this 108.24. And if we get up to this area, I don't care how aggressive of a bull you are, I would take profits and look for a correction. So with that, let's wrap up the session here. Remember to do your homework, look at the markets. That's why we looked at those different crosses to get a bearing on direction for the other major crosses. Weigh the potential trades, have a plan and stay the course. Remember those pivot levels and directions and know where to have your risk at. I'm Teddy Keckstedt from Forex Trading Unlocked. I want to thank you very much for your time with this webinar, and then also want to thank the Nadex as well. And you can always find us at www.forex-trading-unlocked.com. And please like, follow, and share us on Twitch, StockTwits, and LinkedIn for all kinds of different content that we have. And also, if you want to learn more about buy and sell signals and when to try and figure out which side of the market you want to be on, you can read a book called High Probable Japanese Candlestick Patterns that helps to explain and remove the fog of mystery on how to actually properly use candlestick patterns. It's available on Kindle and paperback on Amazon. Check it out to utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. So with that, thank you very much. On this Wednesday, September 11th, please take some time to remember those that have been impacted by that horrible day in U.S. history. Have a good day.
Let's go over to our man, Mr. Teddy Cakestat, as we do each and every Wednesday. It's Wednesday, right? At 40 past the hour. And listen, folks, you can check out Teddy every trading day at Forex-Trading-Unlocked.com. It's Forex-Trading-Unlocked.com. Teddy Cakestat, what's going on, brother?
I'm doing pretty good in this short holiday week we got going on.
Yes, and we got action in these currencies, man.
We do. We have some sell signals and some buy signals, and very interesting position with the U.S. dollar shaping up today.
Yeah, you know, that thing it got over that 90, well, the index got over that 98,770, had no juice, and then just gave it up again. So that mark there has been there for so long, man. You know, the euro and the pound. Talk to me about the euro and the pound.
Okay, well, the euro and the pound yesterday both stamped a new lower move low, but they came off it pretty nicely, and they settled positive, and today they have a nice reaction. There's a lot of economic numbers that are coming out this week for the pound, the euro, the U.S. dollar, and the yen. PMI is one of the big numbers for for Germany, for the EU, for England, for the UK. So there's a lot of major economic numbers that came out today, tomorrow, and also coming into Friday that are probably going to stir things up. The interesting thing is that everything's been basically analyzed to the point to where everyone's looking downward at all these numbers, and now they're actually beating expectations, and some of them are actually beating them pretty good. So I think that you're going to see a little follow through. We got a little buy signal, kind of a sell signal for the dollar going on for the next couple days. But Friday is going to be the very big crucial day, I think, for these currencies, for the euro and the pound. And if you look up the charts, you can see how they spiked. And right now, the euro is pretty strong today.
Yeah, no, listen, it's impressive. When we were talking to Kevin Hinks earlier in the day here, you know, they've been down for so long. It's like, you know, you can, you know, we'll see where it goes, but you can certainly think that, you know, you don't go down forever, you don't go up forever, you know.
Sure.
I mean, so.
There's also another positive reinforcement. If you look at the U.S. dollar Swiss, they also spiked high yesterday, and there's trading pretty low. I think they were on their offer when I first logged in to you guys. So there's a sell signal there. So you have weakness in the dollar against the Swiss. Right now, you have weakness in the dollar against the pound and the euro. This is just as a reaction. Yesterday, I think, was more of a reaction to the holiday markets and opening up in the U.S.
Yes.
Follow through today. So we had very big numbers that came out today throughout Asia and Europe, and also we have big ones coming out over the next couple of days. So I think we have a little bit of a little change in trend for the dollar. It's also manifesting in the U.S. dollar Canada. That's turning around. Ironically, the one currency that's showing strength, where the dollar is showing strength, is in the Japanese yen. So, and that's going to be, I think that's ready for a nice little play to the upside, a little contrarian trade for the trend.
Yeah, it's so intriguing, man. Like, we know that Brexit's getting closer, right? And the real kicker is, sometimes when I look at the pound or the yen, Teddy, it's like the euro. The euro seems to almost take worse beating than the pound.
Right. Well, the euro-pound cross actually is not doing so well. That's riding support right now. So the pound, I think, is getting a lift. Remember, we've been talking for the past couple months about the Brexit deadlines. The first one was September 1st. I mean, we just came off of a holiday weekend out in the UK. Boris was pretty busy over the weekend.
Yeah.
Doing this, that. I mean, first, second, third, now we're at September 4th. I mean, each day going to October 31st. It's going to be an interesting little fight going on, I think.
Yes.
Yeah, it's definitely a food fight.
It's
Yeah.
headlines every few hours coming over there.
I mean, because, you know, like this morning, they start talking about the aspect that, okay, we might get another referendum vote, too.
Yes.
You know?
Right.
And, boy, that'd be something else.
It seems like it fits right in
I don't think
line.
it's going to happen, though. I think Boris he's really hardlining things. Remember we talked about last week about the potential suspension of Parliament?
Yes.
We may see that happen. I don't think that this guy's not messing around. He's pretty much shown that he's not just a petulant kid stamping his feet. Like, he says what does what he says. So I think that the more they agitate him, the more likely he is going to prorogue, if you will.
Yeah.
Yeah, no, that's not, you can see it. I mean, he was clear as a bell.
He's the prime minister,
where he's going.
And he's going to use every kind of...
And, you know, the Supreme Court today ruled that it was legal what he did,
yes.
you know, with the Parliament there.
Yes.
So.
Yes, right. So, and I think that that's where you look at the Swiss, where I think that the market actually is absorbing, or big money is absorbing this whole situation, the Brexit thing, where we might see some strength in the pound now. And now if we have strength in the pound, even if the euro is weak, the pound is one of the biggest currencies out there. It's going to hit the dollar index. And if the Swiss continues to break, you know, now is it going to be a big bear? Well, we know the U.S. dollar Swiss has been a bear for quite some time. So if this reinforces it, you know, that starts to see the dollar index should take a turn for a little bit, which it's due for a correction. This is, I'm not calling for a bearish, you know, change in the dollar, but right now we're in a very good week or two phase where we could see a nice corrective move off of these new highs and lows that were set yesterday in these multiple crosses.
Boy, I just put the, I can see why people put their money into the, I guess, the Swiss franc, or even the dollar, because when you put this up, it's like, this has been pretty stable for a long period of time, right? I mean, I'm bringing it back to 2011, and the top of that is like 103, and the bottom is like 93. Not bad.
Okay.
Yeah.
And then here's another fade fact for you. I did a lot of reading about the UK and Brexit and stuff like that from different papers around the US and around the globe. Everyone is, now, when we talk about parity, what do we think of? We always think about the US dollar Swiss trade, right? Usually if you hear the word parity, that's the first thing that comes to mind.
Okay.
There's always talk about parity in the pound dollar. I really don't think there's any likelihood of parity in the pound dollar anytime soon, even if Brexit was to be postponed for another year. You know, that's ridiculous. You know, so that alone, the more you start pushing that stuff, I think we're looking for a lift in the pound.
Yeah, I agree, man. Because what Teddy's talking about, folks, the lowest, I just brought this pound back for 20 years, and the lowest it's been is in October of 2016 at 118, you know.
Yeah.
And guess what, folks? You're down from 211.
Right.
And that's probably, is that the Brexit kind of fall apart? Was that 2016? It might be. That'd be 3 years ago.
It probably is, yeah.
3 years.
That was probably the initial. That was the initial jolt.
The initial
right?
vote.
Yeah.
Vote. You know what it was? Because I remember it was ahead of our presidential election. Because after Trump got elected, it said, "Hey, why didn't everybody wake up, man? You see what happened over Brexit, right? I mean, that's right.
Right.
Absolutely.
Yeah.
Wow.
Absolutely. So, and we got a deadline coming up in a few weeks. You know, October 31st. I mean, the summer's over, guys. Labor Day happened. You know, Halloween. I went to Costco. They got the costumes out. We know it's right.
Summer's over. That's right, man.
You're going to be Boris Johnson?
Yeah. That's a good one.
Get that disheveled hair.
Awesome,
Get that hair. Get that hair ready.
Totally.
I was just going to say I have to work on the hairdo.
Okay.
Yeah.
Just give it a nice,
I don't think anyone could get his hairdo.
That's all it takes.
I'll keep mine as long as I got some.
Yes.
Right?
Teddy, thank you so much, man. Really appreciate it.
Thanks, Teddy.
Okay. Have a great one. Have a safe one. Every trading day, folks, you can check them out. Trading.
Forex.
No, Forex-trading-unlocked.com. Stay right there. Tommy and I come right back.
That's something you're going to find that's going to definitely be the prevailing mood for the next, until a recession comes, because we have all the chicken littles out there. I mean, if you say recession's coming long enough, eventually you'll be right, just like any type of turn or market event. But right now we have no reason to. Let's look at the realities of the numbers, and they have been beating the expectations, especially in the EU. The Swiss, unless there's a major shift in their GDP number that comes out tomorrow, I think that you'll probably find a reinforcement of bearish momentum for the dollar strength in the Swiss, at least for a follow-through move to maybe get us down into this target range and hit maybe into that area of the 97 area, or maybe that's probably about the extent of a break. if you look at this target range, it comes into the upward sloping support line for the new trend, which right now the market is in a current bullish intermediate trend. So right now we're looking at a short-term bearish correction, not a turn in the market. And that's why I think that that target right there, if we fail the 98.27, that first purple pivot line tomorrow, or today especially, then we were only a blink away from the target, the heart of that target range, which is 97.97. Once we get into that area, I don't think you're going to keep on pressing extremes. I think that it'll start to either digest and go sideways, or by attrition, eventually bounce off that support line. That's if the trend is your friend, and that will be maintaining. Now, if we have a true turn in the dollar that's occurring right now, then that's a whole different scenario. Then we're looking at taking out that lower 97.65 pivot, at which point then we're targeting that last higher move low, where we have the upward sloping blue line second point from. So if we get down there, then what would that mean? That would mean that we have some serious dollar weakness going on. At that point, you would probably, this is why we're looking at these currencies to get the relationships. Usually we look at trade zones, like we would look at Swiss, the euro, and the pound versus each other to try and get a signaling here. But right now we're keying off the dollar with all these crosses. And this is a big deal because usually we have markets, even though they're not in tandem, or they may be divergent of each other. Right now we seem to have all of these major currency crosses doing the same thing versus the dollar. So it's going to be really interesting to see how the dollar index reacts throughout the rest of the day today. And that's another thing to look at. If you key off the dollar index and it continues to be looking like it's riding support today, then I think you're probably going to see markets that we've talked about right now, the US dollar Canada, the euro US dollar, the euro the pound dollar, to continue to be strong, and US dollar weakness to prevail for the rest of the day into tomorrow's session. So that being said, right now, the high from yesterday, where this bearish engulfing line pattern sell signal emerged, I would say that that is your definitely your line in the sand for bulls and bears. Because if we get a rally that turns around and takes out that high, well, we're making higher move highs, bullish fundamentally. And that also means that the sell signal would be negated and also fail. And so that would mean that we have some very strong strength in the US dollar as well, or some major weakness in the Swiss. Now, here's the one thing: of all the currencies we talked about today, what are the odds that the Swiss are really going to shake things up? The last time they did was when they said they were going to stop supporting the euro. So that was over a year ago. So they do make moves, and when they do, they're radical, or they do shake up the news because they just come out and do it. The one thing that you can count on about the Swiss, besides having good skiing and making good watches, is that they have no problem with short-term pain for long-term gain. Like, they will definitely, I mean, the last time they made a move, they took out, what was it, close to $2 trillion out of their market within just, what was it, in a couple hours. It evaporated. So if we did that in the United States, we probably have people panicking in the streets, which most people don't realize how they're not affected by a move like that. But long term, it paid off. So that being said, I think unless we have an event like that, let's just go with the Swiss being steady eddies and maybe hit that target range and then start to be neutral, because we want to see if there's a real turn in the dollar happening. Now, if we do continue down to that support area and those other markets we talked about continue with their momentum, then obviously the dollar index would most likely be decreasing, riding support, which would be reinforcing these trades. Now, here's where we have the counter trade. You can't always be riding against the dollar, right, folks, or riding with it. You got to have something that goes different. We have some very interesting things that have come out recently in the news, besides what we talked about earlier with the pair of the pound. The Bank of Japan becoming hawkish. I read some stuff about that and heard some things where there's a consensus amongst some gurus about that the Bank of Japan is going to start to fall in line with the rest of the central banks. I really doubt that. They've been riding this storm for almost 30 years, for Christ's sakes. I don't think that they're going to deal with what's going on in the economy or the world the way the other central banks are right now. Especially, we had positive numbers out of China. Now, these were not Chinese numbers. These are numbers that we know are good because of the other countries that gauge these numbers and get the actual true values of trade for export and imports coming in and out of China. So that being said, it was very bullish for China, which is also bullish for the Australian dollar and also for the Japanese yen. As far as the economy, as far as being active in production and manufacturing. So as far as recession fears, it does help to minimize those because those are being imposed heavily on those markets, at least in the news. Now you can see that we had a little over a week and a half ago, we had a bullish engulfing signal in the US dollar JPY. Now this market has been in a bearish market, just like the US dollar Swiss, for quite a while. In fact, the Swiss and the JPY have been the two crosses that, while the other ones have been weak against the dollar, these two have been strong, even in the midst of the global turmoil as far as recessions and the trade wars and what have you. The Japanese yen has been strong, and the Japanese strong against other currencies as well. However, maybe U.S. dollar weakness U.S. dollar strength is starting to finally rear its head. Well, is it U.S. dollar strength? We looked at the other currencies. The U.S. dollar strength doesn't seem to be there. So what is causing this rally? It's probably a corrective phase for the Japanese yen, I would say. So we have this bullish engulfing signal that came out a little over a week and a half ago. So what's happened since then? Well, we had a little rally. We've fallen back over the past couple sessions. Today, the market's strong. It's liking what's happened with the Chinese numbers. So if we look at yesterday's low and look at that as a higher move low after falling back for a couple days, let's see if today's rally starts to really get some momentum. So if you see right above the high of today's bar, this is from just before this video, we have a pivot at 106.316. We have a directional arrow then pointing towards that green horizontal line at 106.887. That is a crucial resistance area that if we can breach that, the momentum of higher move highs and that bullish engulfing signal would then mean that with the odds of us hitting that target range and pressuring that 107.447 area are very, very probable. Now, anything above that target range is in between two big pivots there. I think it's going to be hard to get above that 107.447 level, just because the only way I see that really maintaining a big rally up to that area would mean you'd have to have a lot of US dollar strength coming in or yen weakness. Now, we looked at those other markets. If the trend short run, especially pressing into the next week or two, it starts to show dollar weakness, meaning strength in those other currency crosses we spoke of, it's going to be really hard for the US dollar yen to get much higher than that 107.447 area. So that target range, I think we have a good shot at nipping it in the bottom area, a part of that range, especially if we get above 106.887. We're looking at higher move highs. That bullish momentum right there probably will build enough, be enough to get to touch that spot. I don't know if we would be able to maintain the trend. So that's going to have to look at how the numbers come out and see how the trends in the other currencies start to shake out as well. But yeah, there's a very good chance that it could go up to there. Now, yesterday's low, that's for you bears to key off of. If we fall back on that, then we're looking at that 105.606 pivot, and that's a directional down pivot. And that means that this bullish engulfing signal that we had did all it could just to lift the market into a range trade before the bears start to jump all over it. Now remember, US dollar strength has not been in this market for quite some time. So for this market to fall back on itself, I think that if you're a range trader or an aggressive bear, you key off those purple pivots right now, and you got a good shot. We could be contained like today with the market where it's pressing the highs. We may stay within the range of yesterday's trading and start to go sideways. I mean, if you look at where we've been for the past month, we've basically been trading between 105.606 and this 106.316 pivot. So if that's the case and this market's more going sideways, then which is very possible, So this BOJ hawkish stuff, like unless we start to see that really rear its heads and the BOJ starts to change its stance, which it's been pretty rock solid on, then we might start to see a total change in the US dollar Japanese yen overall trend. But right now, remember, the US dollar Japanese yen is in an overall bear market. Long term, intermediate term, short term, it's sideways, trying to make a little rally. So key off those pivots. So if you're a bull, 106.316, looking for a challenge of 106.87. And then if you're an aggressive bear, if this market's going to be range bound, then 106.887 is a good reversal level to look for. But I would say most likely contained down to that 105.606 pivot. So with that being said, I want to thank you very much for your time today. Do your homework, look at the markets, please weigh your potential trades, have a plan and stay the course. Pay attention to those numbers coming out over the next couple days. I'm Teddy Keckstedt from Forex Trading Unlocked. You can always find me at www.forex-trading-unlocked.com. Please like, follow, and share my links and information on Twitch and StockTwits and LinkedIn, if you will. And if you want to learn more about those signals that we talked about in a couple of those markets, I wrote a book called High Probable Japanese Candlestick Patterns that's available on Amazon.com. You can get it on Kindle version or paperback, or if you are a Kindle Unlimited member, you can read it whenever you want. So check it out. To utilize the best buy and sell patterns used for over 400 years, give yourself a competitive edge against the markets. With that, I want to say thank you very much for your time. Teddy Keckstedt, you have a great day. Good morning, everyone. This is Teddy Keckstedt from Forex Trading Unlocked with the Forex market breakdown for you, and sponsored by Nadex. So let's get through some accounting first. Get this page to move. There we go. So we have our Nadex disclaimer, just reminding you that this webinar is for information purposes, educational purposes only. Okay, so with that, let's now jump to the economic calendar. So we have some actually key economic releases that are going to impact or may impact our major currencies, not just the US dollar, but the euro, the yen, and the Canada. So today we have the Euro consumer confidence. This is a big number because we've had a mixed batch over the past couple of weeks when it comes to Germany and the whole Eurozone on manufacturing, production, and some other key economic numbers. So it'll be interesting to see how, as we wind down the summer and everyone comes back from holiday in Europe, what the tone is going to be as we move forward into September and the last month of the third quarter. For the US dollar, we have today, we have the Fed's Barkin is going to be speaking today. So I think that it's probably just going to be a reiteration of what Powell said last week, hammering it into at least, I don't know why the news can't get this mindset that the Fed is done cutting rates, even though everyone's promoting, saying that it's going to be cutting rates soon and whatever. That's probably not on the table for at least 3 months, if it happens in this year yet. So then we have tomorrow, we have Tokyo CPI and fresh food. This number is actually kind of important moving forward, setting the tone for the yen. Also, we have a buy signal that has occurred in the Japanese US dollar yen trade. And we will see how it reacts to the number tomorrow, if that reinforces a potential turn. The overall trend is down for US dollar yen. However, we may be on the verge of a nice little corrective move. We'll take a look at that chart in a little bit. Tomorrow, we also have US GDP, another big number for the dollar that can influence a lot of the other currencies. And then we have, for euro, we have German unemployment and harmonized index of consumer prices. That's a pretty long word there, right? Or thing. So yeah, the German unemployment number will definitely be important to see how, if there is a slowdown, we know there is a slowdown in Europe, but not necessarily a recessionary thing. They're still firing on all cylinders too. So to come off of where they're at is probably just a slowdown. So let's see if unemployment starts upticking, then that may start to change the realities of what the slowdown is. Remember, we have Brexit coming up, and it's not just the pound and the UK that are affected by Brexit, but also the EU countries also. And then we have on Friday for the euro, we have CPI, and for Canada, we have GDP. So here we have GDP for both the US dollar and the Canada coming up over the next few days. GDP obviously being one of the top economic forecasting numbers every month. And this also is huge because the US dollar and the Canadian dollar, obviously we're in the same trade zone. So for North American trade, variables as far as for those currency relationships, we might start to see a little bit of a move going on. The Canada, US dollar Canada bull, is it going to continue higher or fall apart? Well, we'll take a look at the levels and see what we have going on. Now, one thing we don't have up here for economic numbers is the British pound. However, we have enough going on with Big Bad Boris that we don't need to have any economic numbers, because I think that they're going to be kind of overshadowed by the rashness of what's going on. So we had the economic summit last week, the G7. It was Boris's first time as the prime minister going overseas, going to Europe. He met in France first, and then he went to Germany, and then they had the G7 meeting, which obviously we know has full of all kinds of different details as far as Brexit and what was talked about there. And I think it was pretty much just supporting the line in the sand. So that being said, Boris Johnson just recently prorogued Parliament. Prorogued, there's your word of the day. So just in case somebody doesn't know if it's a real word or not, it is. And it means to just continue a session of Parliament or Legislative Assembly without dissolving it. So in order for Brexit to happen on the 31st, and we're going to get into the charts and show this, this is the first step that Boris is really, not only that he put in the sand, now he's already thrown the first punch, saying that the hardliners that want to extend the Brexit talks and not make it happen, they're out of luck. Okay, so US dollar Canada, let's first talk about this because it's close to home. It's a North American trade zone. As you can see, the market here has been wedging and going a little bit sideways over the past week and a half. We did have a short-term sell signal, where this downward sloping resistance comes into this high right here, which we have as a pivot at $1.3347. Now, right now, I have this big elliptical area, the limbo zone. So why is this the limbo zone? Well, I don't think that we're going to have, if we get a breach to the upside, I don't think you're going to get much of a follow through. Obviously, US dollar Canada is in a bullish posture. The slope of the trend is not that high. And I think that if the US dollar Canada may remain positive, but it's most likely going to stay inside a range around this area. So the 133.47 down to 131 right here, these would be two boundaries where I think they're going to start to see a containment for the market. So we'll see if the bulls can start to, like today, this chart was just done a little while ago this morning, but the bulls are trying to make a little run at resistance, but we have this downward sloping resistance, which is long-term, coming off the weekly chart, where it is containing and capping the move right now, or at least pausing it. So does it mean that the market's going to reverse here and start to come crashing back below about 30 here, where we have this other downside pivot? Probably not. I think that right now you're most likely going to be contained in this little area here. As far as the bull, you can see that the slope of this, we're kind of going sideways. So by attrition between upward sloping support and downward sloping resistance, we're looking at it kind of moving into a range trade conditions, or at least we're set up for that kind of scenario. Obviously, whether it happens or not, we shall see. And that's why the GDP numbers for both the US dollar and the Canada are really big over the next couple of days. So will it cause US dollar strength, or will it cause US dollar weakness, and also Canadian strength and Canadian weakness? So right now, as far as geopolitically influences on the fundamental aspects, the tariff tit for tat that's been going on even with US and Canada seems to be kind of quiet. So I don't think that any of that is going to be really an impact on anything right now. So except for major fundamental releases, we're probably not going to, oops, I don't know why that, sorry about that, why we would get a move that would be exacerbated. So for directional traders, I think you're going to start to see a nightmare happen. So what you could probably look at here is we have this recent higher move high, and yesterday it looks like we set a new swing low. That would be if the bullish trend is going to remain intact, then we should start to pressure these this last high, take out this $1.3347 pivot, and then look for a challenge of $1.3394. That's about all I see as far as even if we get a rally. I don't think you're going to see any major extension of the trend. And if anything, we're probably going to start to look to settle into a little bit of a sideways trade. Remember, Brexit does impact us, just like, and now that we have a hard line that's been drawn, the question is what's going to happen with the pound and what's going to happen with the euro? Are they going to start to move and fling the dollar around? I think with the euro, we'll get to that chart, probably not so much, but the pound could start to cause some big waves with the US dollar. So we'll get to that chart as well. So right now we have, we're looking at these numbers here with these pivots, this limbo area. So for range traders or for people who are looking for boundaries, this is a high probable containment area right now. So I would not expect much follow through. We have the numbers for the US dollar, more importantly would be tomorrow, and then obviously Canada on Friday. They could possibly neutralize each other. So that would mean that if the dollar starts to get a nice rally off of GDP, and Canadian GDP could just swing it around. So be very careful with your direction here, with your points. And oops, we'll go back again. The mouse is acting a little goofy. Sorry about that. And that's where I would look at. Directionally, I think that unless you get below 131.84 here, right below the elliptical range, I don't think you're going to get much selling pressure. The trend is still bullish. So unless we can generate another swing low, obviously, which would keep that last swing high in place at $1.3347, then I can see where we might start. This might be a corrective mode that will unfold as we move into September after the holiday markets. And that's the last thing I want to talk about as far as this trade also for the US dollar Canada. We are heading into Labor Day weekend in the US. We're coming into the end of summer for everybody. So the ability for moves to manifest may start to really decrease as we head into Thursday and Friday. We know that in the US, a lot of people start to take off on Thursday and Friday, excuse me. And since it is the ending of the summer and people are aware of it globally, they may have a little bit less interest in trading as we head into the weekend ahead of us. So that's another thing to think about that may support range trade type of activity for this market. So we're done with the Canada, and it's not as hard in the news as far as Brexit or China. Like, right now, the US dollar Canada is something that really people don't talk about very much, and it's because there's just as boring compared to everything else. But we'll see what happens on Friday with the GDP. So use caution being a bull, and even as a bear, I don't think you have much to look forward to. So we'll go on now to the Euro US dollar. So we have the timeline there, the Brexit, October 31st. We have had a slightly negative reaction to over the past couple days for the euro, and we can see that today this chart was made up just a little while ago before we started the webinar. Today's trading is kind of lackluster. The range is something I want you to look at. Yesterday's range was very tight. We had a sell-off on Monday, reversing Friday's gains, and as of today, we've pretty much given up most of Friday's gains. Friday set a new higher move low after we had set a lower move high. So does that mean that the trend is starting to reverse? Is euro strength going to come into the market? That's a tough one. With Brexit going in the way it's going on right now, I think that we probably will start to see a range trade develop. I mean, a tighter range trade develop in the euro US dollar. We know that it's been basically a range trade for the past 8 months, and definitely contained within a $3.50 range for the past 4 months. So now I think we're going to just remain in this little area here unless there's a major shakeup with those numbers we talked about. Now, the European unemployment, if that gets an uptick, then euro weakness may start to manifest itself, and we will probably see the bears take out these lows by a little bit, but not very much. I don't think there's going to be very excessive. Now, if the euro unemployment comes out very positive, as far as euro strength, don't get overzealous on that. Now, what we do know is that Friday we set, at least right now, a short-term higher move low. So you can see our pivots here. We have $1.1051 as a downside pivot, which would be off of our low from Friday. And we have the green pivot here, which is a major weekly and monthly pivot point of $1.1183. So below $1.1183, I think you're going to definitely see some resistance. If we can get back above there, you can see the downward resistance coming down from this previous high over here. And so if we get a rally that can breach this downward sloping resistance, then we got a good shot at making a challenge of this 111.83. And then after that, well, that's the questionable part. Will we get follow through? So that's where I think that the unemployment number on Friday for the euro, if it comes out very positive, followed by also the GDP numbers, if they somehow are negative for especially the US dollar, in that case, I think you're going to start to see a little lift for the euro US dollar. We want this market as well. I think that directionally, you have to really use tight risk. So I would right now, since we have the fundamental higher move low, there's not any real buy signal or sell signal to generate any type of real outlook for a long-term move for this market. That's just the way it's been. We know that the euro US dollar has been caught in this range trade, so you got to trade the pivots. Once again, this is kind of like a containment here between the 110.51 here from the low from Friday, and then we have the 111.83 there, the green line. That's where I think you're going to see as we go into the rest of the week in the holiday markets. This is where we'll probably stay within that range again. Only if we can take out that 111.83, the high from Monday actually, which we set a higher move high off of Friday, we fell apart. So if we can then take that high out, well, then we have a new swing high. Maybe we get some bullish momentum that might get us back up towards this 112.51 area. But then, like I said, we're coming into holiday markets, thin markets. I don't think you're going to get so much follow through, but that would be a bullish to neutral indication that the euro US dollar is maintaining strength. Now look above, if you look at the green line here on this chart, it's kind of like a sine wave, if you remember sine waves from math class or science class. We've had the bulk of trading for a month and a half going into the middle of the summer, where we were trading above this 111.83 area, trying to challenge the upper 113 handle area. That has obviously been a thing of the because we fell below that pivot, and it seems that right now it's very hard for the euro to gain any traction. With this Brexit line here, now remember we talked about, we have our new word of the day, prorogued. So what does that mean for the euro and the pound right now, and the euro US and the US dollar, which is part of this triangle? So with that being said, the hardliners that don't want Brexit to happen on October 31st and want to pretty much throw out any type of economic agreements, they're kind of out of luck. So this is the first time I've ever really experienced something like this on a fundamental basis. So I don't know what kind of reactions to even remotely expect. But I do believe that since this hard line has been drawn, even though it's generating pound weakness right now, is going to accelerate the trend moving towards October 31st. Now, the funny thing is, what's the trend been for especially this year with the euro US dollar in the wake of all these Brexit talks? It's been sideways. So maybe if history is any indication of the past, we'll have more of that. And that gets into us where we're looking at these pivots. So let's look at the fundamentals again as far as a swing trade. We've made a newer higher move low, and then if you're looking at the intraday basis, and this is where some of you day traders might start to have some opportunities. where we had Friday, we spiked a little bit higher with a higher move high, and now we're weak. So if the euro US dollar bulls can start to turn around today, especially tomorrow and into Friday, then a challenge of Monday's high is very, very likely. Then we take out the downward sloping resistance that's been going down. You can see the sloping from the beginning of or the end of June through July into August, and keeping this market under pressure. Maybe we get a rally above that. If we take out the high from Monday, we're going to be challenging that line. And then if we can breach that downward sloping resistance, that 111.83 pivot is looking like to be taken out by the bulls. Now, the trading around there, that's a pivot point. So there could be just a lot of range trading around with 111.83, where it's just probably above the 112 handle or coming back below the 111.83 a little bit. So we'll see how this high that was made 2 days ago on Monday, whether or not it holds. If it doesn't, then I think it's positive in the sense that we are going to most likely see a neutral to higher trade as we head into the fall with the euro US dollar. The main thing is the dollar itself. Is it strong, or is it that these other currencies are weak right now? So I think that since this hardline, the stance that Boris Johnson has taken, as we move through, now there's a September 1st deadline as well. When's that? Well, that's next week. That's over Labor Day weekend. So that the fact that he's been the way he has for the past week, and then today has prorogued the parliament, then now it's just a matter of going through motions and hitting the first topics for September 1st. So that being said, as the weakness in the pound is in the market today, and as we head into the weekend, once we start next week in the last month of the third quarter, that's when we might start to see a little turn in the currencies, where it may not be dollar weakness that comes in, or necessarily euro strength, but or euro weakness, but the pound itself may start to wag these around. But until then, it looks like we're going to be set up for more of a range trade. So just to wrap up the euro US dollar again, right now, I think it's kind of like the Canadian trade. It's wedging and looking more like a neutral range trade. So for bears, unless it falls below 110.51, I would be very careful. I would look for selling opportunities into rallies before you jump in the waters. And for bulls right now, you kind of have the swing low from Friday. If those numbers are solid and that bounce really means something, well, then you have a low risk level to be a buyer against. However, I would not be if we do take out that low from Friday, that would be a very foolish place, I think, to be long, because obviously the trend is your friend. The bears will be pressing support, looking for new move lows, and especially with what's going on with the weekend trade and with Boris Johnson, maybe we're going to get another leg lower for the euro US dollar. All right, so with that, let's now go to the pound. Look at this, how it's been acting today. So the pound gave us a buy signal a couple weeks ago that was kind of a grind higher, which is what we were talking about for the past couple of weeks, because it's just like, it's all political, blah, blah, blah. But then last week we had that little rally, and then going into this week, it was holding. It looked like we were starting to set another base as it legs up into the fall. So this bullish move right now, is it a correction or is it for real? So now that the market yesterday and today have been butting up this downward sloping resistance, this blue line here. So as you see today's trading, it definitely sold off really sharply. That was when Boris put the prorogue into place, and it sold off pretty hard. And now it's right around the middle of the session's trade, kind of at the bottom of the range that's been trading over the past couple days. So was it a knee-jerk reaction? Is it the beginning of a reversal back to the lows and resumption of the trend, or are we going to just have a little pause for the cause before the bulls make a challenge of this downward sloping resistance, take it out, and then make a run at 123.75? So upside breakout toward is what I have on this chart. So was it or was it that was it not, because of the question mark there? So I think that the immediate reaction today is what's caused this harsh sell-off. We have to see as the U.S. markets open and the world starts to react to these issues. Now we noticed that the euro-U.S. dollar, the range is super, super tight today. So we've had a little bit of swinging around from Friday and Monday. Now in the wake of this news, which definitely the Boris Johnson's stance like this impacts the EU and definitely impacts the euro. So, and right now that's in a tight range trade. So think about that. The euro and the pound, two of the biggest components, currencies versus the dollar, one has a radical range today and movement, and one has stayed very, very tight. It's kind of weird. It's like almost like the euro-US dollar has lost its pulse this year. You know, to kind of put it into medical terms, you know, like it's just like, does this thing have a heartbeat? Where, you know, is it alive? No matter what hits it economically through the news or fundamentally through the news, it just doesn't seem to get any follow through or reaction. At least the pound, we've had a trend and we have something to go with. So that being said, right now, I think that today you have to kind of pay attention to what's going on with the initial reaction, but wait and see until tomorrow and into Friday if you're going to start to really, if you're not in a trade right now, I'd be very careful with it. Since the euro-US dollar is not moving, we need to almost see if the dollar can get either hit or not. So with that, let's look at the pivots here. We have our green line here at $125.49. So that is a major weekly, monthly pivot line. So if the bulls can breach this $123.75 here, where which would take out the recent higher move high, then I think we chance at elevating ourselves back up to that area, into that kind of where it will probably set another basing range, where it has been that $125.49, that green pivot down to that first purple dash line at $123.75. There's been a lot of trading over the past in this little area right here. So for the bulls to stretch a rally and a corrective rally into that area, that's a good spot for it to run out of gas. Now, right now, if you, as you see how the market has been butting up against this downward sloping blue line, it's perfect as far as channeling lower for the trend. So if for the market to fall apart like it did today and be negative and then have more negative follow through and start to look to pressure that $1.20 16 pivot at where the low was from a few weeks ago, that would be the perfect scenario as far as a perfect picture if we were to draw it up in this and the bears were to keep a symmetrical trend lower. However, we know that markets aren't that perfect, and especially with what's going on now, if you look at it on a daily basis, from yesterday making a higher move high and today's higher move low, we have something to go on right there. I think these are your two critical pivots. So yesterday's high and today's low, probably in the short run, is going to be the critical range. So above yesterday's high, we could probably look for a challenge of that $123.75 level. And only if we get above there, then I would be very careful. So if you're, let's say you're a short, if you're a bear here, if you're looking to look for a selling opportunity, that $123.75 area might be a good area if you're that aggressive as of a bear. If you think that the trend is going to resume itself, this is just a corrective rally. However, if this is a sign of the time for the next month, like you got to realize that at first the pound reacted negatively to Boris Johnson being the prime minister and things that are going on. So the world may not like what he's doing, and part of England may not like what he's doing, but he is doing what he's doing, and he's moving forward towards Brexit. So once again, we have the October 31st line in the sand drawn over there, and it's very likely that after today's reaction, we're going to see we have that September 1st deadline next week. It's coming up, but we know that Boris right now is full throttle towards Brexit in October 31st. So will that support the pound? It's very possible that this correction that we've started, we might see a little slide, and then actually this may be the beginning of the turn as we head into Brexit. Remember that Brexit's been postponed so many times, and what's been going on that whole time? The pound US dollar has been breaking. It's helped to drive the trend lower. So now if we have this line in the sand drawn, and now Boris is doing proroguing, that's our word of the day, prorogued Parliament, this is no messing around, folks. I mean, I don't know what more anyone needs to see or understand to have a clue as to what's going on here. Brexit's happening. It's happening October 31st. So it would be a shock to me if it doesn't go through. Now, it's going to be a hard Brexit, but you know what? That's how life is. Sometimes you got to have short-term pain for long-term gain. So, and this breaking away from the EU and regaining sovereignty, it's the real deal. So what will that do? Well, I don't know in the long run, whether it'll support or weaken the pound. But right now we have issues with the US dollar. So I think it's going to be hard for the pound US dollar to maintain its overall bearish posture. I think right now we're looking at probably, since we have the swing high from yesterday and the swing low from today, well, fundamentally on a technical basis, you have higher move high and higher move low. Let's see what works. So for you bulls and bears, for bears, I think if we definitely take out the low of today or head back to the lows today, that's an indication that we might start to see the pound US dollar grind lower and fall apart for the next few sessions into the September trade. However, if we can get above, if today's negative action does come back, especially with the rally over the next couple of days to make a higher move high, that's a very bullish sign for the pound overall. Now, is it going to rocket up to that $1.25.49 and then go higher? I doubt it. I think it means that this short-term correction may have put in a short-term bottom and be the beginning of a sideways to higher trade as we keep on ticking down the clock, which, 2 months, 8 weeks in the market, that goes by pretty quickly. So key pivots here to look out for. Right now, we'll look at yesterday's high and today's low and see what kind of move we have. If you're a bull, look for a challenge in that $1.2375 pivot once we take out, make a new swing high. And then it'll probably have a little bit of a tough time there as it gets close to there. I would expect then for it to start to digest for a little bit before any type of real true bullish continuation would occur. And then if we take out today's low and go back to the lows, well, that kind of puts things off to at least maintain a sideways to lower posture. Remember, the overall trend is lower. So this downward sloping blue line, if it contains the correction that we've had over the past couple of weeks, then the trend is your friend. Look for it to continue to buck up against that blue line, and I'll maybe make a breaking scenario where it might make a run for that 120.16 level from the low from a few weeks ago. I don't think that that's most really going to be the scenario. I think it's more of a digestive trade that's going to happen. So we'll see how Boris shakes things up over the next couple days. Obviously, he's had his first trip to Europe as prime minister, and what a character this guy is turning out to be. I'm not English, don't really follow that much of UK politics except for what pertains to the markets, but this guy's actually becoming quite entertaining just because I find it amusing, because it's such a difference to see the passion come out of someone that's English, and you're like, I thought these people were really reserved. But I guess once they get riled and agitated, here we go. So we'll see what the Boris show brings as we move forward into the fall. So right now, key off yesterday's high and today's low as your pivots. And remember, we made a swing high, higher move high yesterday. And if today's low holds, especially over the next couple of days, then by attrition, we'll probably we'll go through the downward sloping resistance line, but that doesn't necessarily mean that the overall bears are gone. So with that being said, let's move on to our next chart, which is the US dollar Swiss. So we looked at we started in the American trade zone with the US dollar Canada. And even still, it's kind of funny with all these markets, it doesn't seem that there's really much U.S. dollar strength or weakness in anything. So is it because we're end of summer and heading into holiday markets for Labor Day weekend? Partially, it could be. But I don't know. I think there's so much news in the marketplaces that it's starting to get overwhelmed. Everything's canceling itself out, even with the Chinese tariff war that's going on. So what is going on with the Swiss? So as far as flight to quality and strength, now notice that we've had the pound right there where it's been rallying and has a little bit of negative action today, and you can see that the Swiss is very neutral. Now it's been positive over the past couple days, and it's pretty funny because look at the chart here. We have the downward sloping blue line and the upward sloping blue line. So from the downward sloping blue line, we have those the high from back at the just before August, end of July, and then it had a high that was set last Friday that the market fell off. So it looked like the U.S. dollar Swiss was, especially with that radical sell-off, it looks like it is definitely kind of bearish to lower as far as the market sentiment is concerned. But then look what happened on Monday. We had a complete reversal of fortune. The market gapped lower, set a newer, higher swing low, and then bounced off it very strongly, settling pretty much in the 50% mark of the day's trading range from Friday, and continued yesterday higher. And it's today even still, well, I don't know where it is right now currently, but before the video, it was slightly higher. So what does that mean? So U.S. dollar, Swiss, is there flight to quality in the dollar right now? Is that what's this? Is Swiss weakness going to start to settle into the market as we have these Brexit things going on? No, I don't think so. I think that this is where range traders, you can start to look at that swing high from Friday and the swing low from Monday, which would put you at that that first purple dash line, the upper one, which is 98.76, and the lower one is 97.13. Now remember, we were all in the parity talk for on and off this year. I don't hear anybody talking about parity. So as far as U.S. dollar strength, it looks like it's starting to wane against a lot of the major currencies, because look at what we're talking about with Brexit. Even if the trend right now continues as it has in the short run, it's starting to show that the fact that we have a Brexit solution, even if it's not a pretty one, we have a timeline. That's why on all these charts, except for the Canada, I put this line in the sand from October 31st. Now, what happens that? What does that mean? So now that we're making progress, the Brexit hasn't happened yet. It does have to happen for us to really start to set a tone for any major trend for these currencies. But as we move forward, it's very likely that we're going to see a contained range trade just stay for the next couple of weeks. So if you're a directional outright trader, I think it's going to be a little rough on you for both bulls and bears. I mean, Friday's sell signal, that had, I mean, on a short-term basis, that would be very bearish. And then here it turned around, I mean, like a balloon underwater on Monday, heading back up into today's trade. So what do you make of that one? I mean, a major reversal sell signal, then followed by a major reversal buy signal. That's on a daily basis. That means intraday trading, you've had some good swings over the last week and a half. Now we're heading into holiday markets. I think that that's going to dry up. It's going to start, I think volume's going to be thin. And that may be one of the reasons why we've had such a radical move on Friday and even on Monday. We're dealing with thin volumes in both the cash Forex markets, the futures markets, the futures options markets. It's just, and also even now the Nadex options, I don't know as far as volume, how that's been going into the end of the summer. But I think that's definitely one of the things that's putting a play or keeping these markets contained. We've looked at the U.S. market, U.S. dollar Canada, and we've looked at now the third currency in the Eurozone. And what do we have to say? It's going nowhere right now. It just looks like that. So let's look at one last market here. We have the U.S. dollar yen. Now this is one where we can actually see a potential move. We have a piercing line buy signal that happened the other day, and this might be the market that tells us if the European currencies are going to get a move. U.S. dollar strength looks like it's about to show its head in this market. We had an agreement made between U.S. and Japan on during the G7 meeting, which was kind of a surprise because it looked like us in Asia were having nothing but issues, and even some with Japan, but an agreement is on the table. And now this neutral zone, you see I have two ovals here. So that piercing line right there is a buy signal. You see these pivots here, the yellow lines, and then you have this purple upside pivot at $106, 106.964. It looks like with this buy signal that the bulls are going to have a good shot at challenging that area over the next week or two, which takes it out of the neutral zone. A breach of that high of 106.96 would have it. I'm targeting that bullish target range up there. Now you notice I have a 50-day moving average descending into that bullish target range. That's going to be dropping towards that key pivot at 106.96 over the next few sessions. So if we get a rally from the US dollar yen that challenges that moving average line as well as that pivot, you could have that could stop the market and contain it and maintain a. Now remember, this is a bearish trend right now overall, long-term, short-term, and intermediate. However, if the short-term trend can pierce that level, then we'll have had a lower move low with a higher move high, neutralizing the current trend lower. Now, I mean, the overall bear is gone? No, but it means that probably over the next few weeks and even the next couple months as we go into October 31st Brexit, we might start to see the US dollar gain traction over the yen, which then puts it up towards that 107, 457 area. So that being said, we looked at all these different currencies from around the globe. Sideways looks like it's the call, except for maybe the US dollar yen. I think that this one has a good shot at least in the short term, having a correction unfold. If that does happen, it's one of the lesser major currencies. That means dollar strength is eking into the market. That might also cause that US dollar Swiss to continue its little bullish pressure. And then we'll see if that starts to hit the pound and the euro. So right now it looks like we have a good line on the US dollar as far as is it bullish? No, but it seems like the bull is having a hard time at running out of gas. The bears are going to have a tough time with it. So for your bias on any currency that's with the dollar, look for pretty much a bias towards a bullish dollar and weaker other currency cross. We went over the numbers. We've gone across all the trade zones. Remember, we're coming into the holidays. This is where directional traders, you're probably, except for in this market, your opportunities are waning. Unless you're a range trader and you can trade the containments like the Nadex options, the brackets, or even some of the touch spreads, those might be good opportunities to trade some of these levels that we talked about, especially since we have a lack of trend direction in a couple of them. Remember, we talked about those swing highs and swing lows. Be mindful of those levels, as well as these highlighted numbers that we've had on these charts. You can refer to the recording of the video later. And that's pretty much all we got to say for the markets. As for the Wednesday market breakdown, as we head into the end of the week, the end of the summer, and the end of the month. That's another thing too. Remember, we're coming to month end, so all kinds of balancing might just be kind of wash out a lot of trading. So with that, please do your homework. Look at all the markets when you make your trades, weigh your potential trades, have a plan, and stay the course. I'm Teddy Keckstedt from Forex Trading Unlocked, and you can always find out what I got going on at www.forex-trading-unlocked.com. You can also like, follow, and share me on Twitch. That would be great. Stock Twits and LinkedIn, and always see what we have going on. And just like we talked about that Japanese market trade right there, I wrote a book, High Probable Japanese Candlestick Patterns, which is available on Amazon.com on Kindle version and paperback version. If you are a Kindle Unlimited member, you can just read the book at your leisure whenever you want. You don't have to purchase it. Of course, I'd rather you purchase it. But that being said, you can utilize the best buy and sell patterns used for over 400 years. Give yourself a competitive edge against the markets. we have a buy pattern that just went off in the US dollar yen. Irony of it all, a Japanese candlestick pattern in the US dollar yen. Let's see what happens as we rest of the week goes on, and next week hopefully we'll be talking about a rally that has manifested itself. And just to reiterate once again, we're coming into holiday markets. Be careful, all you directional traders out there. So look for probably, I would say you're probably going to lean towards options trades for over the next week and a half or so too, if you're going to have any opportunities. Outrights, I think you're going to be in a world of hurt. So I'm staying away. So you do good luck with everything. So that being said, thank you very much. This is the end. Good morning, everyone. This is Teddy Keckstedt from Forex Trading Unlocked, and we're here with a Wednesday morning Forex market breakdown for you. And we have a lot of things to discuss. We have on the other side of the pond, we have Boris Johnson to talk about, and we are going to see how that's affecting the pound and the other markets around the world. So with that, let's move on to our disclaimer. I'm just letting you know that this webinar is for illustrative purposes only, educational purposes. And with that, let's hit the economic calendar. So we've had a lot of numbers over the past few weeks, a lot of big economic numbers. This week, it's kind of like a summertime wrap up. We have today, Wednesday the 21st, we have for the US dollar, the FOMC minutes, which all the currencies have been kind of hanging on this FOMC minutes thing today for the past, basically since Sunday night when they opened up. Today we also have the Canadian CPI, which we're going to also talk about the Canada today. There's some interesting things shaping up there. And then tomorrow on Thursday we have, for the Japanese yen, we have their CPI. And then we also have the beginning of a two-day, while the markets are open, Jackson Hole Symposium. So the US dollar, as well as a lot of other well, the US dollar will be definitely talked about, other currencies as well. I think that except for some knee-jerk reactions off of these numbers today, tomorrow, and I think markets are going to be pretty quiet while this symposium goes on. And then we also have for the euro, the German PMI and the ECB monetary policy meeting that is going on. And then Friday we have the Jackson Hole Symposium, as well as the U.S. Fed's Powell speech that is going to happen. So we have the CPI numbers and these get-togethers. So not too many numbers as a whole, but we do have kind of like a wrap-up from, we had a central bank marathon that went on earlier, middle of the summer, that ended a couple weeks ago. And then we've had the digestive follow-through reactions over the past couple of weeks that we've watched and absorbed. And now this is kind of, I think, the kind of closure to what's gone on over the past month and a half, setting the tone for the fall, because we're about to head into holiday markets in the U.S., and we also are heading into, obviously, the fall and the end of the holiday period in Europe, what have you, as well as around the globe. So as the governments come to work and the big banks and everything and everybody starts to come back online in full throttle, we should start to see a little bit of action and volatility kick up, which is interesting because right now volatility has been pretty much dropping because of FOMC minutes, which are today. And I think you're going to have a knee-jerk reaction because this Jackson Hole Symposium has been talked about for the past week and a half globally. So with that, let's look at the British pound US dollar first. It's at our forefront today. We all know that Brexit is something that's been going on for a while. However, something very, very interesting has happened over the past few weeks as Boris Johnson has become the prime minister. And has started to deal with the various parties in the UK as well as with the EU. So what is going on? Well, today and tomorrow, we didn't have any numbers to talk about for the pound. There are some, but nothing really major. But what really is going on is two things. One is Boris goes to France. It's like weekend of Bernie's. So no, Boris is going to France, and then he's also going to Berlin. So is this a bull or a bear for the currency markets in Europe, for the pound and the euro? I think that besides the fact that they're on the FOMC minutes for as far as the euro is concerned, I think that the pound is going to be kind of stabilized and neutral kind of range trade action for the rest of the week because of what's going on as far as this is Boris's first trip as a prime minister to, well, anywhere to begin with, let alone to the EU and to deal with Brexit. Now, before we start to talk about these numbers, the biggest thing that's come about with this trip is that yesterday, and you can fact check this, I did on multiple sources to make sure I even got this right. And to quote, Boris Johnson put this out on multiple social media platforms and also said this, but to quote, Boris said, the referendum result must be respected. We will leave the EU the 31st of October. So this was his exact words, and he put this out on multiple sources. You can fact check it. I did. It's been in the news. But that's a very bold statement. That tells you that when he goes on his trip today, which he obviously would be in France, and he's going on to Berlin afterwards, that this is where the line in the sand has been drawn. So now initially, we're going to start to look at the numbers. Gas low that was planted a couple weeks ago. This was right after Boris had taken the position as prime minister. When he first came in, the market kind of started to neutralize and go sideways. There was obviously a lot of central bank stuff going on, not so much with the Bank of England, because like certain other central banks, they have too much other things going on that playing with their currencies and interest rates is only going to disrupt things. So that being said, we've had a nice little corrective rally that's been going on off this little buy signal. And it's pretty much been that because we're heading into this first meeting of Boris and the EU. Now, the EU has definitely put their line in the stand. They really don't want Brexit to happen. They don't want it to happen October 31st. In fact, their whole position is that the Brexit will be a hard Brexit. They are not coming to the table. They're coming to the table, but they're not negotiating as far as the trade deals. And with that being said, as the pound has been weakening for all this time, now it looks like there's a possible bottoming going on. For the mere fact is that this October 31st, and you can see as we have this downward sloping resistance here, it comes right down into the middle of October. So the odds of us going sideways and to lower into that period are probably lesser than going to the upside. So let's look at this, what's going on here. Now, we had a short-term buy signal, and we are in a short-term uptrend. Yesterday, the market tried to sell off hard and then bounced back with a positive close. Now, obviously, today, this is a recent chart, the pound US dollar is a little bit negative on the day. But if you look at this on a wave theory basis, we had our last lower move low. We had set a high. Now, this is hard to see because it's on a daily basis here. But if you looked at it on an hourly basis, yesterday's high took out the high from 2 prior days ago. So that means that it made a higher move high after it made a lower move low. So today's trading is going to be very interesting to see if it can take out the high from yesterday. Then we have this monthly, and we all pivot as well as this prior high from a couple weeks ago. They come in right here. So a breach of this, as most likely the bulls will probably get an accelerated buying momentum up into this critical resistance zone. Now, why is this critical? One, we have the downward sloping resistance for the trend. So right now, we could just be in a corrective move higher. So am I bullish the pound? Am I saying that we're looking for a bottom and a turn? Absolutely not. However, we do have right now a current upside short-term uptrend, even though it's not very powerful. But then look at the momentum to the downside. So it's grinding higher. And I think that right now, a lot of your weak shorts will be scrambling in this area right here. So directional traders, I would say that if you're on the long side, yesterday's low for sure would be a great risk level. Definitely anything below this low from the beginning of August, you definitely don't want to be long. I think the trend for there, then we have some very adverse things. that's the pound component. Then there's the US dollar component. So as far as that's concerned, because the the Bank of England is not quite on the bandwagon as many of the central banks, and also following the Fed, the US Fed, I think that kind of gives the pound a little bit of weight moving forward over the next few months. So it's hard for this current downtrend, I think, to continue to pressure in a very hard way. If anything, it would be a sideways to lower trade, not quite as severe as a downtrend like we've had over the past few months that was leading up to Boris Johnson's becoming the new prime minister. So that being said, we look at this 121.95 to 122.09 area. This is our critical resistance level, where I think that we are probably going to see a challenge of this over the next couple sessions. And then above that, then I think that this is area here around 123.08 up towards this 123.83 area would be probably the capper, where we have this, because we have this downward sloping resistance. We have some monthly pivots, as well as by that time, we're looking at a very long, drawn-out, grinding corrective rally where we'll probably see a pause, as well as the fact that September 1st is also the first deadline for Brexit. So the reason they're going, Boris is going to Europe, is to talk about these things. So we have this economic symposium that's coming at the end of our week, which are definitely going to talk about the things that are happening today and tomorrow in the EU. We also have the FOMC minutes FOMC minutes that are coming out today that I think, like I said, I think are going to be just more of a knee-jerk reaction and not very overreactionary. So we have these arrows here. So right here, directionally, I think above this little area here of 122.09, you're going to see a little bit of upside pressure. I would say as far as longs, though, definitely be very leery. Anything below the low from yesterday, and without a doubt, this low at 120.19. Anything underneath there, the bears are going to be overwhelming the trade, or momentum. That means there's probably some sort of, well, more of the same going on with the EU and with the UK. But like I said, we have Boris, who drew the line in the sand, and it seems like he's very staunch on that, and we will see what goes on with that. So with that being said, we have US dollar weakness starting to look and show its signs in the pound. Now remember, the pound is one of the biggest currencies out there. The dollar index has still been strong, and it looks like, especially if we can get this breach of this area, what does that mean? It means we probably are going to start to see a turn in the dollar, and that is something that we've all been looking for a while, just because of the strength. It's like the dollar seems to be a raging bull without being supported for any reason, which doesn't make any sense. So let's move on to the next chart and talk about the euro, since we just went with the pound. So now what goes on in the euro, the US dollar? Okay, so we know we have a couple numbers that are coming out. We talked about that. And we have obviously Boris coming to town, to Berlin. And yesterday, interesting enough, we had a bullish engulfing buy signal. The low yesterday made a slightly lower low. So if the signal is correct, then this recent correction that has occurred over the past week and a half should be coming to a halt for at least a few days. And now, because of the FOMC minutes and because of the Jackson Hole Symposium, it's very likely that a range trade would develop. I mean, you can see today's range has been very tight so far. And even yesterday's range wasn't very big. So this positive buy signal means that obviously it's looking for upward momentum to build. However, expectations, because of what's going on in the market, I would say be very leery of seeing any type of radical move to the upside. So I would key off of yesterday's low here at around 110.64. Obviously, a failure here would negate this short signal. Now, this bullish engulfing line, it looks, now it's in perspective, it is the right size and it is a good signal as far as the fundamentals of a bullish engulfing buy signal. The market was breaking for a couple weeks into this signal. It had planted that low, so the numbers are there for it. However, the ranges aren't there. So what's your risk reward? I think right now, directionally, you have a very low risk trade for longs. If you got in
yesterday or today. However, your expectations to the upside, what are they? Normally with this signal, it would put you up around this 111.5, challenging this 111.81 area, which would put you right into this downward sloping resistance. And for a corrective move on an overall bearish trend, that would kind of look like a nice little swing trade. However, because of what's going on in the market the next few days, sometimes you can't push it. We're at the end of the summer. We have a lot of things that the world is hanging on. After having this aftermath of central banks, we don't have that to look forward to for another few weeks. So that being said, all we have is like I said, the forest going to Europe kind of thing. So is that positive? Well, right now, I think Euro strength is trying to show itself. Now, the interesting thing is the Euro may see a little lift here against the dollar. Interesting enough, though, the Euro has been turning against the pound. And that's something that I've been watching, and that's why I think that the pound that we've already looked at has a good shot at following through to the upside a little bit, because the pound obviously has been trending lower against the dollar. Well, it's been getting crushed against the euro, especially as of late. And markets tend to go in like they go out. Except for like right here, like this market slid really hard over the past week. I don't think you're going to see a radical rally that correct itself back up here really fast because of the news that's coming out. So we'll see how the reaction to the euro numbers, even as you can see, they had already came out when this chart had been made, and this is not a big range. So they're not reacting to those numbers. They're reacting to the meeting that's going to come out over the next couple of days. And I think that's going to set a tone too. I don't think that Boris is going over there aggressively to just be bad-mouthing or being a bully, but he did put a staunch statement saying that, like I said, we're leaving the 31st of October, and we're coming up on this 1st September deadline. And I think that now we have some clear directional bias for Brexit, which right now will not necessarily be adverse for the euro US dollar, even though it is against the euro pound. But if the euro is decreasing against the pound, that doesn't affect the dollar trade. But if the pound is going up against the dollar, that does help to give the euro a lift. So since we have the pound that's been trending a little bit, it looks like it wants to pressure resistance more. That helps us with this buy signal right here. So the pound and the euro should, or not should, but may have a very good chance at pressuring resistance over the next few sessions and into next week as we wind down the last part of the summer. So right here, let's look at these key levels. I think that right now above the 110.64, which is yesterday's low, the market is definitely looking to pressure the upside into this downward sloping resistance area. This 111.81, I believe, is going to be your cap. I don't think you're going to have anything beyond that. However, if we were to breach this 111.81, that takes out this monthly pivot level, also takes out this downward sloping resistance area, and then has the market probably targeting and settling into this bullish target zone here. This would be, I think, the extreme. You can see I have downward pivoting arrows here at 112.49 and also at 112.80. I really believe you're going to see a cap here. I don't think that there's enough going on in the market right now, even with numbers that are looking to come out over the next few weeks, that could possibly drive the euro US dollar any higher than that bullish target zone. Could it breach this downward sloping resistance? Very well could, but I don't think you're going to take out this 112.49. I think right now we had set a lower move high. Right now, if this bullish signal holds, it's a higher move low. But not necessarily. It could be just the first low before it sets a lower move high. So if the market caps in here, it's very likely that it'll go sideways to lower again. So we're not looking for a major turn in the euro US dollar, just like in the pound US dollar, but we are looking for strength in those two currencies in that trading zone, and weakness in the dollar. Now, we don't have a Swiss US dollar Swiss chart up, but that chart has definitely been
dollar weakness, and we have Swiss strength that continues into today and into this week. So that being said, with the Swiss, which has been a bull against the dollar for a while, and now with a positive lift, if you will, of some signals. Obviously, we have one signal in this market, as well as a current short-term lift in the pound. We have three major currencies in the EU trade zone that are now aggressively starting or looking to build a posture that may be an aggressive bull coming into the fall, and we start to move out of the end of the third quarter into the fourth quarter. And I think that come September, going into October, we'll already start to set a new intermediate trend, and then we'll see how that pops and it reacts at October 31st and how we trade into that. So the numbers aren't that big for the EU. We already talked about the euro was the one that had the most numbers coming out over the next 3 days, and as you can see, the reaction on this chart, which was taken just before this webinar, is pretty bleak. There's nothing that's really happened. So volatility has dropped because of FOMC minutes and Jackson Hole. So that's why right now I think the fundamentals are off the table, and the technicals right now are kind of ruling the trade, but there's not much there. So for directional traders, you have to weigh your risk reward. So if you, like for instance with this trade, you have some upside potential, but and your risk reward level is the numbers are right. However, because of the FOMC minutes and the other Jackson Hole thing, the momentum may not be strong. This may actually just be a grind higher where it's just not gonna manifest. It's gonna be a positive, but you're not gonna see very much follow through. So that's good for options traders. So for outright Forex and futures traders, I'd say be careful if you're not in the trade. You know your risk levels here, especially like this 110.64 for bulls, and for bears for sure. A failure here has us leaning back on this 110.26, and failure from there. Well, then this current trend, which after all the intermediate trend is down. The trend is your friend. So this is a short-term counter trend trade, and it's very tight in the risk levels, So those are your pivot points, and strike prices to look at too would be definitely something around this 110.64, and for sure right now, I think also for a low risk buy too, and stretching a little bit, you have this 110.26 for risk, but definitely below there, it's very, very negative. And then even here, if we get to this target zone, it's going to probably set into a choppy area and fall off of it. As you can see how the market had consolidated for days over here. It was pretty ugly before we had this last slide. And the momentum is definitely to the downside. So be very cautious with your risk if you're definitely going to play the long side. So we have the inklings of dollar weakness that are coming in from two major currencies. The pound and the euro are the biggest currencies that are out there, but next to the US dollar. And if they are truly starting to have a turn, and the euro doesn't need to have a big turn, and neither does the pound for it to impact the US dollar. So with that being said, look at what else we have. We have a short-term reversal signal that happened yesterday in the US dollar Canada. Now we have the one Canadian number. It's a medium level number. So as far as the reaction, you can see today's trading was definitely pretty much on the offer side when this chart was taken a little while ago. And yesterday there was a short-term sell signal. This is a candlestick pattern here. Now this trade has already obviously had quite a move already that has started, at least as of this chart. I don't know where it's at currently. This was done about a half an hour ago. So this is in place, and right now this 133.46 is a big upside downside directional pivot. So the intermediate and short-term trend obviously is bullish here. It has a fairly steep sloping rally that the market's been in for the past month. As you can see though, unlike the euro, which has had very tight ranges for the most part over the past couple months, the US dollar, Canadian dollar has had some nice swing trades and definitely some big days here. Now, right now with the short-term sell signal, we're looking for the market to start to creep down and to test this upward sloping support. And if it can fall through here, I think you're probably going to see it start to digest around this 132.34 level. If the market could get underneath here, then it's probably just going to chop around in the lower part of this target zone. I don't think that 131.83, first of all, if this trend is to maintain itself, this 131.83 should hold. Now, interesting enough, we kind of have a double topping situation here with this current uptrend. Yesterday's high barely took out this high from 2 weeks ago. So we did make a higher move high. So on our basic fundamentals, higher move highs, higher move lows, the trend is your friend. The bulls are still in place. So even if this short-term sell signal is a good signal, it is a short-term sell signal. The overall momentum is to the upside. This should be just a corrective move, which would then be contained in this target zone if it was to continue to slide. And this 131.83 would be the level that would hold. If it obviously if it falls below there, then this would be a very good double topping scenario, and the intermediate trend would then be more neutral, with the short-term trend being bearish. And what would cause that? It would mean that we would have excessive US dollar weakness. So maybe that could happen. We were talking about how the US dollar is starting to wane against the euro and the pound. Probably not going to be excessive with the euro, but a little more action with the pound. But now the Canadian dollar, where the US dollar has been strong against, obviously, for the past couple of months, if the dollar is turning and the index starts to turn, that would mean that one of the other major weights, like the Canadian dollar, might start to become stronger against the US dollar because of US dollar weakness. So is US dollar weakness what is starting to drive these markets? I don't know. Right now, because of all the central bank stuff and the FOMC things, minutes that are coming out today and what have you, we know where the central bank posture is. It's very dovish. As far as most of them, they're all kind of working together, so it cancels out, except for when you're talking about the pound, because they're not necessarily jumping on the bandwagon because they have too many other things that are affecting their markets, versus where the euro, where they're trying to save and head off a recessionary environment. And then the Canadian issue is they have some tariff stuff going on with the US, but they've been pretty much kind of, I would say, not silenced, but they're nothing more than murmurs right now. And so dollar weakness could start to come into this trade. So yesterday's high is a very good low risk short-term barrier for bears. Obviously above here, the trend is in place, and more upside momentum could we have? Well, we could be up at 134.37 within a couple sessions. So definitely be careful if you're a bear. But if you are a bear, and a very aggressive bear, right now you have your good opportunity. And even if you're a long-term bear, this is a really good spot right now as we look for a potential correction down towards this target zone. And if US dollar weakness does start to prevail, now think about this. We talked about the pound. If the pound truly is bottoming and starts to continue further with the short-term uptrend, followed with the euro US dollar short-term rally, that starts to weaken the dollar by the major currencies, which also sets the tone of direction for most currencies against the dollar. That would go in tandem with the short-term reversal signal, and that would also put the US dollar Canada trade looking like it's going to probably come down at least into this target zone here. Now we have to see, and that would come into this near the September 1st deadline, which we have for Brexit, the first one, and this could be beginning of where we start to see a new trend in the dollar, and moving forward with Brexit and things like that, which means that if we're starting to have a positive outlook, meaning that how Brexit, whether it's good or bad, whatever, that's irrelevant. But if it does happen, and we can positively say as of Halloween, we're going to move forward, however it may be, UK will regain its sovereignty, and then they can figure out everything else as they move forward. That could be a very good trend to see as we move into the third and fourth quarter, which would mean dollar weakness, which we should see dollar weakness.
because of the environment with the interest rates as well. So right now we're looking at a potential very big pivotal point for a couple of your major currencies, your euro, your pound, and as well as our Canadian dollar, which is in our trade zone. So first we looked at the European trade zone. We didn't pull up the Swiss chart, but that's already been in that case strong against the dollar. So, and now here we have the inklings of dollar weakness versus one of our biggest trading partners and close to home, the Canadian dollar. So with that, let's now move on to our last trade, and we're going to go jump to Asia. So Asia, range trade to lower target area. That's where we're at. We have a bunch of pivots here right now. The market is in a short-term corrective move to the upside. Overall, dollar weakness has definitely been the overall trend with the US dollar yen. So any rallies, we're looking to be corrective. We have heavy resistance that comes up at this 107.669 level, as you can see where the downward sloping resistance is here, where it comes into this pivot. If we were to start to see a continuation of a grinding higher rally, I think this would be where you would see a cap. Definitely the high set over a week ago, around 106.97. If we could breach this area, probably going to make a run at this 107.69 area. Then I think you're going to probably the trend is your friend and heavy resistance is in play. If US dollar weakness is the case, like we talked about in those other currencies, and if that is over the next week or two, it's going to be really hard for a rally to get up into this area. So that being said, you're probably going to see the US dollar yen stay in this range trade area or start to lean back on this 106.57 area. This would be after we get through the FOMC minutes and blah, blah, and the Jackson Hole stuff this week. And then moving forward, I think that's when you're going to start to see a chance of leaning on support again. However, until that period, over the next 3 days, unlike the euro, that looks like we have a little potential buy situation, or the pound situation where there's a potential buy going on there, or the US dollar Canada, where we have a short-term sell signal and looking like a change in direction. This one here is definitely a range trade situation shaping up here. I think that directional traders are kind of in their risk reward isn't there. I don't think that a breakout to the upside or downside is worth playing because I think it's just going to be more of the same until there's any really major reaction like another cut in rates by the US Fed. So that being said, range traders, options traders have a good chance at exercise or capitalizing off of these pivots here around 106.057 and then up here around this 106.67 to 106.77 area up here. So around here, here's your upper band, and then here's your lower band where I think the market's going to be contained, especially over the next 3 sessions. And at least until Sunday night, I don't think you're going to start to see a breakout. And even if you do, it's going to be really hard to take out this high that was set a week ago. And if it starts to lean on support again and take out this 106.57 level, the trend is your friend. That means that a lower move high has been put in place and we're looking to go sideways to lower. So overall, we are starting to finally see, after a summer of lots of indecision, the potential for a turn in the dollar. So keep in mind, always look at the dollar index, no matter what currency you're trading. And well, obviously, if it's a cross against the dollar, but even when you're trading other exotic crosses. But the thing to pay attention to right now is that Brexit looks like it's on the table. And you're going to start to see some strength in the pound, not necessarily strength in the euro because of what's going on in the EU. I think it's more an inkling of dollar weakness that's starting to show its head. So we'll see how that manifests over the next couple weeks. And right now, remember, today the FOMC minutes is big. We have the Jackson Hole Symposium for Thursday, Friday, with the Powell speech follow-up on Friday. So the world, as we wind down this week, is ending its summer and kind of drifting. So US dollar yen traders look for range
option type opportunities. Don't look for any type of really directional opportunity. I think the likelihood is very weak. The odds are not there. And for the pound dollar, we could be looking at the beginning of a new trend, or at least a short-term bounce, giving strength as Boris goes to Europe. So who knows? We'll see what happens when how that goes. So very interesting, but it does. We are starting to show signs of at least a short-term corrective possibility for the U.S. dollar as we move forward over the next couple of weeks, moving into Labor Day and ending our summer. So with that being said, always do your homework, look at the markets, weigh your potential trades, have a plan. So we have a plan for those currencies that we talked about today, and the rest, well, there's not, like I said, there's a lot of people weighing on this FOMC minutes and what have you. So we guys got to deal with it for the rest of the week. Tight trade. Take it easy. It's the end of summer. Enjoy. I'm Teddy Keckstedt from Forex Trading Unlocked. You can always find us at www.forex-trading-unlocked.com. Please like, follow, and share us on Twitch, StockTwix, and LinkedIn, and see what we have going on every day. And good luck with your trading. And also, if you those patterns, those sell signals and buy signals that we talked about, I wrote a book called High Probable Japanese Candlestick Patterns. It's available on Kindle and paperback on Amazon. If you're an Amazon Prime member, you can just read it like any book. Like you just go on and it's part of your monthly fee. So it doesn't, and you don't have to buy it. You can read it anytime you want at your leisure. So thank you very much. You have a great day, and you have a plan for the next few days because we know it's going to be a little bit tight. And let's see how these buy and sell signals manifest. With that, take care. Have a good day. Good morning, everyone. This is Teddy Keckstedt from Forex Trading Unlocked, and we're here with a Wednesday morning Forex market breakdown for you, sponsored by Nadex. And okay, we can just get there we go. Oops, here comes our Nadex disclaimer, which just lets you know that this webinar is for illustrative purposes. And just wanted to take care of that first little formality. And now let's jump into our economic calendar and see what's relevant for the next few days of the rest of the trading week. So we have today, we have for US dollar, the import price index. For the euro, we have German GDP, EU GDP, and French CPI, all of which will definitely have a little bit of influence on the euro today. And then we have the British pound, GBP rather, retail price index and PPI. So are these going to stir up the European currencies and finally get them to bust out of their range? Well, we're going to have to see what happens with that today, won't we? And then tomorrow we have the Australian employment, which is going to be a big number for them. For US dollar, we have the industrial production, and we also have retail sales. Two things that are going to be probably watched very closely as far as the US dollar. So those two numbers, when they come out, a lot of other currencies may be pretty quiet going into the US market opening and the release of those numbers. And then we also have on Friday the US dollar housing starts, which is Sometimes it's a big number, sometimes it's a medium range number. I think that as we head into the middle of third quarter here, that this number is going to be very key as we start to move into the fall, and as especially as we start to head into election season, because we know that the real estate market will definitely be one of the topics probably coming up in the over the course of next year with the new election. So with that, let's go on to our first chart. So for Euro US dollar, we've been looking at this market for quite some time, and as one thing we always remind everyone about is that the Euro US dollar, even though on the chart looks like it has some nice little movement and swing trades, if you look at the ranges, they're very, very, very tight. Recently, the trade, like if you see like over the past week, the ranges haven't been more than basically a half a dollar to 70 pips. So that's not much of a range for any type of swing traders, obviously. Intraday traders must be getting chewed up, I would think. Range traders and options traders, definitely this is a very, very good environment right now because the pivots are working very well, as the fact that there's so much neutralizing impacts by economic numbers, and then also you have, like, for instance, the Brexit. So Euro US dollar is impacted by Brexit, which we are coming close to that September 1st deadline, and then the October 31st hard Brexit, whatever. We'll see what happens. Right now, it seems like that's all going south. So for the Euro US dollar, we had some really negative numbers that have been setting the tone for a negative trend in the EU economy. Moving forward, production numbers for the past couple of weeks have been very, very bad for Germany as well as other countries in the EU. We have also some Italian elections that are coming up in the forefront. We have those numbers that we just spoke about as far as the for France and for Germany. So we have to see how that impacts today's trading. So far, as you can see, this chart was just copied right before this webinar began. The range today has been very, 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 very tight. So this chop zone right here is meant as kind of a guide for where I think we're going to see the market pretty much drift into over the next, definitely into the rest of this week and moving into next week. I think that this $1.1265 is going to be pretty much your cap, just above these highs here. This would be a critical pivot to get above. A breach of this level would definitely show that there is some positive things going on with the euro and in the eurozone. And that's the one thing that's hard to grasp of, is that except for one number in the past week, almost everything has come out very negative. So right now, it's really hard to see how any bullish momentum, if they do get above here, how much is there really to the upside? I would say maybe about a $13.5, $1.13.5. So you're looking at maybe a full dollar above this would be the extent of any type of inflated rally. I think we pretty much would run out of gas there. However, as you see right now, it's having trouble just getting above this 111.85.81 pivot band right here. So this is both a weekly, daily, and there's also another fib number that comes right into where the market's trading at right now. So we have this downward sloping resistance right here containing this little wedging formation that we have here. Is it going to pop? It's likely that we're probably by attrition going to move sideways and take out this downward sloping resistance. Now, if the bears can start to really get something going, and what would do that? It would mean you're probably going to have to see a bunch of US dollar strength. And now that's the funny thing is right now is that the US dollar is becoming a reluctant bull. It's because of we're in the wake of all the central bank actions that have occurred over the past couple weeks. And we know that moving forward, we definitely were waiting on some more to happen, especially coming out of the EU. And it will be a reflection of their how they are interpreting their economic numbers that come out also. So I think that it's probably going to be another week or two before you're going to see any type of ECB actions, which is going to contain everything within this $1.1265 to pretty much $1.11, which leaves you a little over $1.50 of a range that the market's going to be chopping around in. And if you look at this, it's not like a rocket science to like think that this could occur, because if you look at this critical pivot that I talked about here, where we have this 111.85, 81 pivot band here, just above it, up towards where our breakout pivot is. This has been where a bulk of the trading has occurred since May. And then below this pivot, this is where we had spikes of fairly decent support that comes in quickly, not support that drags out, can stay in this area here. So I think that it probably will be contained by this 111.06 area. Only a failure from here would I see us trying to make a run for this low over here. If the Euro-US dollar trends that deep back into these lows, that probably means that there's a lot of really, really bad numbers that would be coming out over the next week and a half that would help to propel the bearish momentum. As far as dollar strength is concerned, there's too many other factors that have it neutralizing. So it's kind of funny, as we've had some pretty decent swings in the Euro-US dollar over the course of the summer. I mean, the ranges have been very tight. There hasn't been much risk exposure. However, there have been some decent moves and swings in this area up until the last week and a half. So after we had this nice little turn, we had this one little bullish move here. And then look what happened. We had all these central banks, and you would think that in the wake of all this that we would start to set a trend one way or the other with this market. Not happening. It's just not happening. So I think you're going to see more of the same. And that being said, I'd be very careful for any outright directional traders, as far as if you're going to look to be bullish, I think you look to buy into weakness, and I think you look to sell into strength if you're a bear. Just because I don't think you're going to see much activity. I mean, just by the ranges, if you see how this traded, we had this big gush bullish move here, followed by this where we set the recent high. So this was a turning point day, signaled that, not necessarily a change in trend. And then within always, that has contained the range up until the last couple sessions, with the bulk of trading being right around where that market had settled after this rally. So that being said, it's almost like there's a median line that it's kind of like an EKG, how it goes flat before you get a spike one way or the other. And I think that's pretty much what we've settled into. And that's why I have this chop zone here. This is where I think you're going to be contained. I would be very, very careful. Anywhere above this area right here, like I said, once again, 112.65, and definitely I don't think I think you're gonna be exhausted before you get down towards this low over here. So now let's go look at the British pound US dollar, because we're on that side of the pond right now. So we're starting out in Europe, and then we're gonna make our way over to Asia to try and get a grasp of what's going on with the dollar. Okay, so this is a whole nother story. The British pound has its own woes. I think that is there correction in sight. It's actually kind of set up for that right now. The sentiment by all the pundits and everything is that the pound is just going to continue to erode versus the dollar. I buy that scenario. I think that that's most likely that what's going to happen is that this bearish trend is going to continue over the next couple months, at least until the middle of September. And then depending how the tone is between the UK and the EU, I think that would maybe set a balancing. When the market was here over the summer, rounding out here before this collapse after these central bank actions, and after Boris got signed into the prime minister spot, this market fell apart. I thought we were looking to round out a bottom and maybe start to see some kind of progressive at least coming to the table. However, since then, it's been actually, it seems, I think things have gone more south than they were before Boris Johnson took over as Prime Minister of the UK. So this target zone range here, not that bullish. However, I think that there's a good chance that how this range that had been set for the past week and a half, it lowered last Friday. And then it kind of took a little bit of a test of it on Sunday night, Monday, and as you can see, it's been pretty much contained. This little Monday here was a kind of a weak buy signal, nothing major, but especially since this trend is something I would highly suggest you don't try and catch a falling knife, and be mindful of being long. So I think that if you're an aggressive long, you can use Monday's low just beyond that somewhere as a risk level. However, what is your potential to the upside? Well, that's a good question. We could obviously spark a correction and get all the way up towards this 125.58 pivot, which that's the only way I see any type of major bullish action coming into this market. And I really don't think that's going to happen. I think this downward sloping resistance here should contain the trend at least, well, probably going into, look, here's October 1st. I think that that's very likely that this market is going to continue to drift lower, but not necessarily so severely. We see how basically for the last now almost 2 weeks, the British pound US dollar has gone sideways. The ranges are not very tight, even though Friday it lowered the range. I would not going to say that it's bottoming, but I think that by attrition, you're going to start to see it just chop around and move towards this downward sloping resistance, where it may still test support a little bit, but I don't think you're going to get very much. As you can see that as it's been making these lows, it recoils right back into a very tight trade. So the irony of it all is that the UK has actually had a couple economic numbers over the past couple of weeks that have benefited their economy, or at least show some not necessarily signs of growth or any type of major long-term bullishness or anything, but however, I think it's because they keep downplaying the UK so much that since the expectations are so overblown, it's pretty easy for the UK to beat expectations. Not that that's necessarily bullish, but that I think is the case of what's going on right now. So that being said, I think that your target range, once again, this is where you have to look for possibly any type of upside action, and it's most likely going to be contained. This $23.76 area is going to be very tough to get above, at which point you're going to have to first breach this downward sloping resistance at the same point. If there's a breach of this 123.76 area, maybe then you can see how there was this little range here between these two pivots. Maybe then we get a challenge of 125.58 on any type of blow off move. And the pound definitely can have violent trending days. Unlike most currencies, that this one, when it pops, it really, really pops. So you don't want to get in front of that freight train. So an upside correction, if there was some sort of US dollar weakness that really prevailed, some kind of prevailing headwind, then that would probably readjust the pound US dollar. And when I say readjust, it means because of major dollar weakness, that scenario would pan out where we could see the pound rally up to challenge this 125.58 area and maybe even get back into this zone where it had been for most of the summer, which I thought that, I mean, this is almost a direct opposite of where I thought we would be. This break here and sliding down into this, I thought would be